All right, all right. What's going on, guys? What's today? Thursday. Happy Thursday. I normally do this on Wednesdays, but happy Thursday. It's been a minute since I've done an Ask the Trader video. All right, just like usual. Uh if you have any questions, any stocks that you want me to analyze for you, I want you to write it in the comment section. But before I start, I want you guys to go to the comment section, type the stock that you want, and I need somebody to tell me that they hear me clearly. As soon as I get the message that I sound loud and clear, I'll go ahead and start. And I'm going to go for 2 hours straight today. All right, 2 hours straight. Now, I haven't done this in a while, so I don't know if I have the endurance to keep it up, keep the energy up. So I'm going to try though. But if somebody could if somebody in the comment section, all right, somebody said that they could hear me, so I can go ahead and start. So welcome to Ask the Trader. Uh, I'm a full-time day trader. If you don't know this about me, I am a full-time day trader, guys. I am a full-time day trader. That means not only do I teach, but I buy things and I show you guys my receipts. All right. So I am an investor, I am a trader, I am an educator. All right. And I do this full time, even when I'm on the golf course. Even when I'm on the golf course, I got CNBC playing in the background so I don't miss out on anything. All right. I am an expert in stocks, options, futures, and cryptocurrency. I have over, I think it's 15 years. I have over 15 years and over 30,000 hours of trading and investing experience. And just recently, I've been doing, my first job was a lifeguard. All right. Everybody knows that I was a lifeguard and I was a supervisor over all of these different pools. My first professional job as an entrepreneur was a real estate agent. I did home inspections. I was a real estate agent. I even took an appraisal class. So a lot of people don't know that about me. That a lot of the reasons why I'm able to, that I created the What Would Joe Do method was because I took my understanding of real estate and value and I switched it over into the stock market, which a lot of people don't do, right? And that's why I've been so successful at it as an investor, as a trader, and as a teacher. So I am with this company called Real Broker right now. I decided to go with this company because a friend of mine that I put on to real estate, it's always great to work with people that you know and that you trust, that you brought along, and then now they can bring you along. And now that my kids are in college, I have like all of this time to golf and trade. So I said, why not sell a little bit of real estate and get on the investing side again? And I love this company because I can invest in the company. Like Real Brokerage is actually on the stock exchange. So we could, when we get commissions, we can set aside part of our commissions to go into the stock so that I can work on being wealthy. And we're going to talk about wealth a little bit later. But I just want everybody to know that the opinions, anything that we talk about today, are the opinions. The opinions. Don't be trying to sue me. Opinions, 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 opinions of Joel Harrison. Opinions. Do your due diligence. All right, that's my thing. DYI. I want you guys to do everything on your own. Quit hiring people to trade and invest for you. Do it on your own, guys. It's not that hard. I don't care what all of these naysayers out there say about the market being hard and can't make money. If the market's rigged to go up, you literally could have bought any stock and it's up. There it's pretty much at its all-time highs right now. The market is rigged to go up, and with this administration that's in right now, business is what they are focused on. So if you're investing in real estate in the stock market, you're feeling like a fat cat right now. So we're going to talk about a couple of things. We're gonna talk about a little bit about real estate, and then I'm gonna get to you guys as stock. We'll get back to business. Type the stocks that you want me to analyze. You guys know that I'm not, when you guys come with your questions, I'm not like any other trader. I actually understand. I've done more consultations, I think, than anybody I've ever known that's in the stock market. And I do that for research, right? The more people that I talk to, the more likely I understand what position you're in and where you want to go. And that's what that's what makes me a gem in this industry. So when you type your stock, don't just type, hey, look at Apple, because I don't know if you're a trader. I don't know if you're an investor. I don't know if you're buying it in options. I don't know what your strategy is. I know the strategy is to make a whole bunch of money, but how much money, right? And that's where I come into play. That's what the what would Joel do method. That's why I created that method, because so many of us were just buying things and we had no goals. We didn't know why we were buying it. We didn't know how long we wanted to be in it. We didn't know even when we wanted to sell those particular things. So learning my system, learning how to go through your questions before you buy things is what keeps me in business. All right, so we got enough people on. So again, welcome to Ask the Trader. We're going to be talking about the what would Joel do method. The what would Joel do method. A lot of copycats out there, but the what would Joel do method is a method that I've created from my experience in the market. Not to just educate you guys, but my experience as an investor, as a trader, as somebody that's trying to create wealth, somebody whose family has gotten rich off the market, and we're trying to get to that wealth status. All right, we're going to talk about that a lot today. All right, investing is a lifestyle. All right, it just is, guys. When you're around other people that are investing and trading in the market, you start to understand that it's a lifestyle change that you have to make in your mind and in the way that you do things if you want to accumulate, if you want to be able to capitalize on companies like Nvidia or Apple or Microsoft, these companies that have been making people millions of dollars. You gotta understand that it's a lifestyle. And I, so many people get the lifestyle thing, like, I don't want to show you everything that I'm doing, but you have to, it's just a lifestyle, right? You have to surround yourself with people that are doing the same things that you're doing. You don't have to necessarily do it the way that they're doing it, but you have to apply what you do on an everyday basis in the way that you invest in the market. Invest in the things that are, yeah. And I hate when teachers or people come out and say, don't invest in what you know. Like, that's like one of the dumbest comments I've ever heard in my life. Like, you've been in an industry for your whole life, but they're going to tell you don't invest in that particular industry. That always lets me know the type of person or individual or that I'm talking to, because I'm like, oh, you don't know what the heck you talking about. How you gonna tell me not to invest in something that I know? Because if I know it, then it's easier for me to understand it, and it will make me feel more comfortable investing in it or trading it, right? So you always go with what you know first. When I first started in this business, the only thing I knew was Apple products and gold and silver. That's it. And I made a fortune the first 3 or 4 years of trading and investing because that's all I knew. Apple and commodities, right? And then, as I started to buy more and more different things and learning different industries and getting comfortable with it, I got more comfortable investing for the long term. So make a habit out of investing, and it will treat you right in the future. So my thing is all about high level simplicity. If you can't explain something or understand it or be able to tell me what you're doing in, pretty much 15 or 20 seconds, you shouldn't be doing it. It's too complicated. So many of you guys take such complicated classes and these complicated strategies and these complicated charts, and then you're wondering why you can't make money in the market. Now, guys, and I always tell you this, the market goes in three directions. Two of the directions is going to keep you in the positive. The market is either going to go up, it's going to go sideways, or it's going to go down. It's going to go up, sideways, or down. Statistics say that the market spends 80% of its time going up. That means the other 20% is moving sideways and down, right? But so many of you guys are so afraid of the market because of the 10% of the time that it goes down in price that you can't capitalize on it going up in value. I've been preaching this over and over and over again, at least for the last decade. All right. Keep it freaking simple. Stop complicating things. It's not that complicated. Find a couple of things that you like to invest in or trade in, pour money into it, have a due date, have a date for how long you want to trade or invest in it, and then keep it moving. All right. The more complicated it is, I promise you, it's going to lose you money. I invest in everything. How can this cat over here invest in everything and still profit better than 90% of the people that we come in contact with? Because I realize that the market's rigged to go up. Different industries are going to go up at different times. If I'm diversified over everything and I'm picking the right companies, I'm going to win. And I continue to win. I've been outperforming the S&P 500 for over a decade. I've been showing my receipts. People can't believe it. They're like, how come you can do it, but Wall Street can't do it? Because they make it complicated. I don't. All right. And I want you guys to do the same thing. Couple of places where you can find me. What Would Joe Do app? Everybody knows the app. You can go to the app. It's free. Download it. If you're looking for, like, some people are like, Joel, how do I get your consultations? Well, you can go through the app. There's a link. It sends you straight to Calendly. Joel, where are your products? Well, you can go through the app. You can go to my page where I sell all of my stuff through the app. Joel, where's your YouTube? Well, you can go through the app. It's going to have a link to my YouTube, my LinkedIn, my Instagram, everything through the app, which is free. And if you want to participate in the subscription, you can do that as well. All right. But it's all through the app. It's free. All right. I do have an ultimate membership. A lot of people take advantage of this because it's $50 a month. You get access to 8 videos. They are older videos, but because I'm consistent, right? Anything that I have taught in the last probably 10 years, you can still use today and will be able to use it for the next 50 years. All right. You will have access to those videos. Now, you won't have access to the newer stuff. You're going to have to go to PayHip to find that. But it gives you an opportunity to take something like, let's say you wanted to take a futures class or an options class or you didn't understand what crypto was, right? Paying this $50 a month, you get access to it. You save yourself $10,000, $15,000 from taking a class, learning from somebody who actually trades and invests. And then you can book a consultation with me for $50 and you can learn. Guys, y'all out here spending $15,000 on classes, and you could have spent $50 and learned what you wanted to learn from somebody who y'all know is better than everybody that's out there. But y'all choose to go the other route. Why? I have no idea. Maybe you're not supposed to be rich. All right. But you guys get to learn from the horse's mouth. One-on-one consultations, me and you, whatever the heck you want to learn. But y'all choose the latter. I don't understand. I guess money is just unlimited for a lot of you guys. But I make everything affordable because I can do that. I make my money from investing and trading. I don't have to charge ludicrous amounts of money in classes. All right. I can give in that particular way, and it comes back to me tenfold, 100-fold. As you can see how, I've been blessed over the years as far as investing and trading. Again, if you want to go to Calendly, if you want to do that one-on-one consultation with me for $50 instead of paying $15,000, go to calendly.com/whatwouldjoel do, book a consultation with me. All right. I still don't understand why y'all are doing it. Maybe y'all scared of me. Maybe I'm intimidating. I don't know. Maybe it's because I'm black. Maybe because I'm young. I don't know. Y'all see my receipts. All right. But I've done thousands. So a lot of you guys have taken advantage. So it's not like I'm not constantly booked. I just don't understand the mindset behind it. Like, you got somebody who shows receipts, who comes in the room every day. You're seeing everything that I buy. I tell you what I'm buying, when I'm buying it, why I'm buying it. But then you choose to take something over here with somebody that you don't know the strategy, don't know what they do, don't have anybody that's even doing what they doing, but y'all choose to go that route because what they on TV or because they're here or there. It makes no freaking sense to me. But whatever, it's your money. You can find me on YouTube. All right. I'm one of the only traders out there that has a GPT. I created this GPT for you guys. All right. You can go there. You can ask it any question. You can type in Tesla. Well, no, let me not say Tesla because there's a lot of controversy behind Tesla. You can type Home Depot. You can type Oracle. It's going to ask you immediately, is this a trade or an investment? And that baffles a lot of you guys because you're like, nobody has ever asked me if this is what the heck is a trade and what the heck is an investment? That's why I created it, because as a consultant, I know the questions to ask. I know that every single one of you have a different risk tolerance. You're trading different things. You guys have different strategies, but we all want to get, to the same level of making money. So, it's going to break down that particular stock for you, and it's going to use some of the indicators that I use to kind of give you an idea of what it's going to do. I don't want you to 100% trust, the AI, but since the AI is out there, go ahead and use it. All right. If you want to, I'm still waiting for more people to come, guys. Y'all know I do this for the first 15 or 20 minutes, then I get into the meat of this session. All right. If you want just individual stuff to trade, like what else out there is there to trade? There's stocks, there's options, there's futures, there's crypto. They're all there on my PayHip for a session that you want. Whether it's old, whether it's new, you're still gonna learn more than 99.99. I promise you, so many advanced traders, so many newbies, when they watch the sessions, they're like, oh my God, nobody's ever broken it down like this. And I'm like, because they probably not trading or investing. So, go ahead and take those. I always tell people, come to me first. It's inexpensive. Take the courses, understand the foundation of these different subjects that you guys want to learn. Sometimes you might not even want to do it. And then you go and you waste your money and you're like, I don't even want to do that. I'd rather do this. I've seen people do that a lot. They'll take a futures class and they really wanted to do options, right? Or they'll take an options class and then they actually, as a day trader, probably should have been doing futures, or vice versa. They should have been doing crypto, or they got a lot of money in their pocket, so they didn't have to do the options accounts, right? They could have just basically bought and sold stock just using a simple basic strategy. That's why I want you guys to come to me first. Let's talk about what you want to do. And then I'll say, oh, yeah, you probably need to go in this particular direction. And there are people that really, really want to go down the rabbit hole. They're like, look, Joel, I'm about to be managing all of these funds. I really need some sound, you know, uh, technical skills to be able to handle this and handle that. And then I'll say, oh, okay, then you probably want to go take this particular class that's over here. But just taking a class just to be taking a class is just ridiculous to me, right? Not knowing what's in store or what you're going to get. I've been getting a lot of questions about that because this is education season. Right after September, right when school starts, that's when I started. That's when I start getting a lot of questions and a lot of information from a lot of you. All right, guys, I'm almost finished. All right, I hate doing this. All right, again, if you are interested in real estate, you can go to joelharrisonrealtor@gmail.com. I work for real. This is a number. This is a number that you can reach me. That's regarding real estate. So when I see that number come in, I immediately know that it's real estate related. If you need, if you're traveling into Georgia and you need help, you're transplant, or even if you're transplanting outside of Georgia, realtors can always connect with other people in different states. So contact me. We can work out something. So let's get to the meat of this whole session, right? We rich. A lot of us that are on here, and I've done a lot of consultations, and I've done consultations for the last 10 years. Look, a lot of people that's been working for over 10 or 15 years are just rich. You know what I'm saying? It's not just, I'm not just saying this just to be saying it. It's just the definition of being rich is, if you've been putting away, if you've lived in a house anywhere, California, DC, even Georgia, and you've been in that home for over 10 or 15 years, chances are if you ever sold that house, you're probably going to be rich, right? If you've been putting $18,000 away in a 401k, just let's just round it up to 20,000, right? Let's say you've been putting 20,000 away for 15 years, right? That's 300 grand that you set aside in a portfolio. And we all know what the stock market has done over the last year. Shoot, in the last 3 years, the S&P has almost doubled, right? So you're probably sitting on $500,000-600,000. When I do consultations, it's not, early when I was doing consultations, when I would see portfolios like that, I would say, oh man, you're doing well for yourself. It's becoming the norm now, right? There's so many millionaires that are in the room that you guys rub, that you guys see every single day, and you don't feel like you're rich, but you're definitely rich. But let's define what rich is, right? Rich is no different than being, modest or even poor. Rich just means, hey, I can buy whatever car I want, or I can live in whatever city I want to live in, or buy the house of my dreams, right? I can go to any restaurant in Atlanta. I can send my kids to any school that they want to go to, right? I can I can go on any vacation that I want. I can spend five figures on a vacation. That's pretty much what rich is, right? When our financial consultant told us, hey, y'all are worth, so and so, right? Me and my wife looked at each other like we don't feel like we're worth that much, because we're in the everyday rat race just like everybody else, right? So most of the time, a lot of us think that, hey, I got this six-figure paying job, and you think the end goal is being rich. Where rich, you're really still in the rat race. You just can buy things that are a lot nicer than what you could buy before, right? You're gonna buy a nicer car than you normally would, right? So rich is cool, but wealth is where we all ultimately want to get to. And I never understood this when I was younger, right? When I was younger, if I was to see what I own and what my family is worth today, I would have thought, hey, there's no more working. But because the cost of everything is going up in value, I'm seeing with my own eyes, even the amount of money that we have or assets that we have to have about 10 to 15 times that amount before we decide we don't have to be able to work anymore. And it's becoming clearer and clearer to me that, the wealth gap is extending. I probably, all of us have come in contact with wealthy people, but people in my circle, I probably only know maybe 9 or 10 people that I know personally that are actually wealthy, that can actually say, I don't feel like doing nothing for 6 months or 12 months. I'm just going to chill. I'm just going to go in my backyard and plant flowers, because they don't, they have enough assets, they have enough money that's coming in to live the lifestyle that they want. And when you're wealthy, it doesn't mean that you have to downsize. It means that I can still go on a 6 or 7 figure vacation. I can still buy the car that I want. I can still do these things. I can just choose to do it or not. And with the way things are going today, a lot of us don't see that anymore. A lot of us are just trying to get to the rich part. And I'm like, you got to get rich before you get wealthy. And when I say that, it makes a lot of people so angry, because they're like, Joel, I can't even get to the point where I can buy the car that I want or go to the restaurant that I want to. So I got another level where I got to get to wealth. And I'm like, yeah, but the wealth part is, in my opinion, the easiest thing to do that a lot of us don't focus on. Right. So there's a game that I play with my kids all the time. It's called Cash Flow, right? By Robert Kiyosaki. Great freaking game. I've been pushing this game in the room before anybody even knew what it was. All right. And anytime I have any parties or friends that come around, I always say, guys, let's go play Cash Flow. Now, what sucks is that the name of the game just doesn't sound like something that's very enjoyable. Like anybody that comes to you and say, hey, it's time to play cash flow, it's just like saying, hey, it's like a job, right? It sounds like something that's just not entertaining. But let me tell you guys, this is one of the most fun games I've ever played. It's more fun to me than Monopoly. It's faster than Monopoly. But what I love about it is that it has the two things that create wealth, right? When you look at statistics, everybody knows that the stock market has created the most millionaires ever. Now think about that. The stock market has created the most millionaires ever, but the real estate market has created the most wealth. Okay. So in order for you to get to that wealth status, you have to be involved in real estate and you have to be involved in the stock market. Now, what's interesting to me is that we all know where to go to amass wealth. But why is it that most of us are either afraid of real estate or we're afraid of the stock market? Oh, no, I don't know, Joel. I don't know if I should invest in the stock market. It just seems like a scam. Word? Like, who are you talking to? Like, the stock market has created more millionaires on the planet, yet you think that it's a casino, right? You got to change the way that you're thinking because you're talking to the wrong people, right? Or, I'm not going to buy any real estate right now. I'm just going to wait. You're going to wait for what? For it to be double or triple in price? Well, it's just an obligation. And I'm like, all right, well, if you're not investing in real estate, are you at least investing in stocks? Well, I'm going to wait until I get rich to invest in the stock market. Who are you talking to? Right? That's why I love playing this particular game. It changes the way that you think about things. It lets you know that it doesn't matter what type of job you have. In fact, the less obligations you have and the less income you have, the easier it is to actually get to that wealth status. The more money that you make, the more obligations you have, the more, y'all have heard the saying, more money, more problems, right? So, playing this particular game is going to allow you to start changing the way that you think so that investing and trading becomes a lifestyle. All right. And I love this game, right? My if you notice, my wife and both of my sons are playing this. Now, if you notice in this picture, they look pretty big, but they're probably like 13, 14 years old. They're now 19 and 20 years old, right? And from this particular game, looking at these receipts, look at some of the stocks that they bought, right? They were buying Nvidia. My son Nasir is up 1,200% in Nvidia, has 40 shares. You can do the math on how much that's worth. And guys, this is just a list of their top performing stocks all the way down. I couldn't put on the page the rest of their stocks. It just went from 1,000% to, maybe 60% in Apple. Apple up 65%, right? My son Zaire, his highest performing asset or stock is Spotify, right? 484%, right? All the way down to Reddit, which is up 36%. And again, this is not in alphabetical order. This is in order from highest percentage to lowest. Y'all don't even see some of the other assets that they're involved in. So that notion that you can't invest in what you know or don't invest in what you know because you might not make money is the most ridiculous thing I've ever heard. Or you got to buy 3 or 4 stocks in order to so you guys got too many stocks. And I'm like, have you guys ever heard anyone tell a millionaire or a billionaire they have too many businesses or they own too much real estate? So why are y'all letting these thousandaires tell y'all you got too many stocks? What kind of ridiculousness is that? Right? Oh, you need to concentrate on one or two things. Guys, stop listening to thousandaires and start listening to wealthy people, hire consultants, start developing a lifestyle around this, and you guys are going to start seeing the ridiculous comments that I see coming into the room all the time. All right. And I used to not be that way. I used to just not be that way until I start seeing the blind leading the blind, right? My son's 19, 20 years old, already got stocks that are up 1,000%. What do you think these stocks are going to be worth when they get 40 or 50? And they already got five-figure accounts now, and they're still investing in this in their sales every month. Okay. Super duper important. All right. All right, so let's look at 14 years ago. All right, 14 years ago, let's bring real estate back into it. I had a friend of mine whose property that I'm listing, and let's bring the real estate side of it, right? Let's think about this wealth thing again. Let's think about real estate and stocks, right? I showed you guys my kids' accounts, right? But think about this. My client bought this house in this public records. It's not like I'm revealing information that's not out there. My client was able to buy this house for about $60,000, right? So now the house is worth they're about to cash out about a 383% return in little over 14 or 15 years. I know a lot of people way back then, 15 years ago, that was like, when real estate was under 100 or under 200 in Atlanta. Oh no, I'm just going to wait until everything's in place and I have some security, and then I'm going to go buy this and buy that. And now the same property that you could have bought for 60 or 70 is now worth 300. And we're seeing that all around us, right? Time goes by really fast. We always put off everything because we feel like, because I've been successful my whole life, oh, it'll just come along. Everything will be just fine. But then you have things like the pandemic that happens, that things that we don't foresee, right? And then the government starts to print money. And what they don't tell you is that all they're doing is inflating the market. And if you're not invested in real estate or stocks, you're going to get left behind. And a lot of us already feel like we're left behind right now, right? I also got another house coming soon. This is a friend of mine as well. So if you're interested, you guys can hit me up. It's not listed yet, but we're soon going to put this on the market. But it's a $380,000 home in West Atlanta, full finished basement. Everything is fully updated. So contact me at 404-884-8433 if you're interested in any of these particular homes. But let's look at some real estate stocks, right? So this is a list. This is going to be on a replay. So for anybody that's looking for real estate related stocks like Zillow or Redfin, or if you're into commercial real estate and you're looking up Simon Property Group or Airbnb, or if you're interested in stuff like American Towers that deals with, American Towers, they put up the towers for, your telephone type stuff. The reason why I have Bank of America and Wells Fargo there is because they're the top companies that are involved in residential real estate loans. All right. I put these companies in the order of market cap, meaning the largest company all the way to the smallest company. So if you notice at the top, you have Home Depot. All right. So the reason why I have Home Depot at the top is because everybody here, especially if you live here in Atlanta, because Arthur Blank owns, Home Depot, and he also owns the Atlanta Falcons. So we all know about this, but everybody here knows about Home Depot and Lowe's, right? Why? Because if you have a home, even if you're renting a property, you can go to Home Depot or Lowe's and you can do home improvement on your particular property. But if you were using the what would Joel do method, and let's just say you didn't have the capital to buy a new house, and you're like, Joel, I just don't have the capital. I barely can breathe, right? But I do, I do want to use your method where you say, hey, if I can tithe and pay 10% for tithing, I can pay 10% and pay myself. So whatever you're making, whatever amount of money that you have coming in, you can take that 10% and start reinvesting it in yourself in what I call a stock mortgage. And using the what would Joe do method, everybody knows I use the what, where, why, and how. The same thing we learn in grade school. You got to be able to ask these particular questions before you buy it. But when you're looking for growth potential, when you're looking for those type of companies that you feel can grow in value, if I'm not able to buy a house, then I can buy a derivative of it, like a Home Depot, because if the housing market is growing, then surely Home Depot is going to grow in value as well, right? So a lot of you guys don't know about market cap. You guys are learning about market cap today. Market cap is single-handedly the most important thing that you look at when you buy a company, not the stock price. The stock price is an illusion. I've been telling you guys this forever. Stop buying stocks because you can buy a whole bunch of shares of it. Ooh, I got $100, so I'd rather buy Ford than buy this other stock because I can buy 20 shares of it. Whereas I can only buy one share of Nvidia. Buy the company that's going to have the growth potential. Stop buying companies because of how many shares you can buy. Ooh, I think I'd rather buy Dogecoin because I can buy 1,000,000 of them instead of buying one Ethereum coin. Because look at how much it is. It's $4,000 a coin. I'd rather use my $4,000 and buy 1,000,000 Dogecoins. Doesn't matter. What matters is how big that company grows. That's why you guys need to do a consultation with me. So let's look at 10 years ago. All right. 10 years ago. If you were to buy Home Depot, it was $75 a share. Okay. 10 years ago. Now I understand that real estate costs hundreds of thousands of dollars. So what I tell people, the reason why the stock market creates more than, hold up, and let me change this so that you guys can see it. Let me take my little mug off. Hold on. Let me put myself down here so y'all can see this. All right. So the stock market creates more millionaires. Why? Because you don't have to be able to have a ridiculous amount of money to make a lot of money in the market. All right, $75, right? If you bought one share for $75 just just 10 years ago, that $75 is now worth $439. Now, my friend that bought that house for 60 and now that house is worth about 289. He actually does both, right? He buys real estate and he buys the stock market. So imagine if they took that 60 or 75,000 and said, you know what? I'm not gonna buy a house. I'm just gonna buy Home Depot. And let's say they put 75,000 into it. That $75,000 will be worth almost 1.5 times the amount that they're getting back today. All right. $75,000 moved to 439,000 because it's the amount of money that you invest, that's going to determine how much, it's going to give you the same percent return. Everybody that buys a share of Home Depot is going to get a 470% return. The more money you put into it, the more money that you will make, right? But just in this same particular scenario, in less time, you could have used the same amount of money and still made almost $500,000 with 75,000. If you had $7,500, it'd be worth $40,000 today. And then maybe you can take that $40,000 and then finally find the house or an investment property that you want, that you can buy, that you can sit on, that can go from 40,000 to maybe 200 or 300. But you have to start somewhere, right? Again, there's so many different ways you can go about it. Now, I created this term called a stock mortgage. All right. A stock mortgage is basically dollar cost averaging with a goal. All right. It's a dollar cost averaging strategy with a goal. Everybody saw that on January 1st, I had a challenge where I said, guys, and I've done this for the last 3 years. I said, for Christmas, I used to hate when Christmas came around and I had to put all this money on my credit card. Like, it would just make me I like to give, but it would just make me angry because most of the time, by the end of the year, I'm trying to figure out how to pay off my credit cards, not how to put more money onto it. So I changed the way that I thought, right? I changed my lifestyle. And I said, guys, from now on, I'm gonna start investing for Christmas in January, and I'm gonna buy an asset that can go up in price. I decided to choose the cryptocurrency market this season, right? We knew that Donald Trump was coming into office. We knew whether you hate him or like him, you knew he was going to be the next crypto president. So there was a chance that crypto was probably going to go up in value. We didn't know what it was going to do. So, what was the challenge, guys? I told you that every week I was going to put $100 into Bitcoin, Ethereum, Solana, and Cardano. And I showed you guys every single month what was happening. And then, sure enough, 4 or 5 months went by because, some of life happens, everybody goes to work. And then I showed you guys where I was. Now, when I first started, it was only $100, $200, $300. But then by the 6th month, y'all were like, all of a sudden, when I showed my receipts, I was, my account was sitting at what, $10,000. And I know a lot of you guys were like, what the heck? How did your account get to $10,000 by June, Joel, when all you were doing was putting $100 in every month? It was because crypto was going up in value. And I was able to put a lot of it in when crypto was low. And then when it doubled, it tripled in price, now I'm sitting at like $10,000 and it's not even October yet. I can sell right now and my family will have a decent Christmas with $10,000. I don't have to worry about my credit cards anymore. All right. This is the same thing. Let's say you had $1,000 a month to put into the market. Now, a lot of you guys, I pick $1,000 because a lot of you guys are paying $1,000 right now in rent, or $1,000 a month when you go to the club, or $1,000 a month on a car note, or $1,000 a month in something that you can cut back on. 10 years ago, if you had just put $1,000 into Home Depot, a company that you knew was going to grow in value because the real estate market was growing in value, in 10 years, you would have looked up and then that account would be worth about $265,000. In 10 years, you could have taken that amount of money and probably put either bought a house that you like or an investment property. Because even if I take this 265 and go buy a house for 265 somewhere in Georgia, you can probably make $2,000 a month on it in rent. But you didn't have to have $265,000. You started to create the wealth for yourself slowly over time. And you just let time go by as you were making those payments into a company that was going up in value. And here's what's crazy. The stock price was going up and you were buying it at a higher price, right? I know it doesn't make a lot of sense to a lot of you guys because you haven't changed the way that you looked at the market and you haven't talked to actual millionaires. You're too busy listening to thousandaires try to tell you how to invest and trade the market. This is what the wealthy are doing. This is what people that are secure, that have 401ks, that are putting $1,800 or $1,500 or $1,600 a month into the S&P 500, not caring if it goes up or down, because if it goes down, you get to buy some. If it goes up, you're still good because what you bought at the lows are going up in price. And if the market is rigged to go up in price, we don't care what happened in the last 10 or 15 years if we know the market's going to be double in the next 10 or 15 years. The reason why it's so scary to a lot of you guys is because you haven't looked at a stock chart. And when you look at a stock chart and you see that for the last 100 years, the market's been averaging 10% moves to the upside, then you'll feel way more comfortable putting money into something, knowing that the government here in the United States is rigging the market to go up in value. All right. So let's talk about what happened yesterday, because a lot of people don't understand. The James Powell, Jerome Powell, I'm sorry. All right, the Fed president came out and he's just a spokesperson. Everybody thinks that Jerome Powell is the one that makes rates go up or down. No, there's like 20 people that vote on having the rates go up or down. It's not just his call, right? He has influence. Yeah, he does, but he's not the one. So for anybody to go after him is just ridiculous to me because he doesn't have the power to raise it or lower it. They have to vote on it. All right. It's just smoking mirrors that are out there. All right. So the Feds lowered the interest rates by a quarter basis points. Now that might not mean a lot to you, right? If you got a 4.5% interest rate and it goes to 4.25, woo woo, it's not really doing anything. But for companies that have billions and billions of dollars that are using a line of credit from a bank to do payroll, it's huge for them, right? It's huge for the corporations. It's really not doing that much for the average person, right? We're going to need to see something significant like a 2% cut or get it back down to 0% before we actually are able to take advantage of it. Because a lot of the times, even though they're lowering the rates, it doesn't necessarily mean that your credit card payments is going down. They're going to leave your credit card payments the same or your interest rate the same. And what's going to happen is the bank's margins are going to increase. And if you know what margins are, that just means that they're going to make more money because if they lower the rates, that means that money is going in their pocket, not your pocket. So, and a lot of people got it mixed up, which is so funny to me because that's the way when you're not educated and you don't understand what's really going on behind closed doors and you're just listening to the politicians talk, you get left behind. All right. So I think that's about it. So let's go. So what does that mean? When the Federal Reserve lowers interest rate, it means it's reducing the federal funds rate, which is the interest rate banks charge each other for overnight loans. Here's what that generally signals and how it affects the economy and markets, right? Credit cards, they start to come down. If you apply for a credit card, you might not be able to, you might not have to have that higher interest rate that a lot of us have. So if you're establishing new credit, it could be a good thing. If you're going to, if you're looking for a car loan right now, it might be a good thing, right? If you're looking for a business loan, that 0.25% or 0.5% is huge. If you're looking for a home, now that the rate is lower, it increases your buying power. So maybe that house that was 250 that you were on the fence with, now you can afford that $275,000 house. And I don't know if that's exact. It's just, an example. All right. So they do this to stimulate economic growth. I hope you guys know that because the rates are going lower, that doesn't mean, I mean, the economy is flourishing and it is doing well, but it is a red flag. Anytime rate starts to go down, real estate starts to go up. The cost of everything around you will start to go up. It's funny because rates go down, things go up. Rates go up, things go up, right? So it's interesting, but it depends on what the margins are going to be for these businesses because it's the businesses that really move the market. All right. I think that's it. So let's get to some of you guys at stocks. Let's get to the stock charts. All right, so this is the S&P 500. Let me put my mug back up here. All right, so this is the stock market. All right, this is the S&P 500. The S&P 500 is the 500 largest companies on the planet. So what I want you guys to notice is that there's a date down here. This is 2018, and we're going all the way to 2026. What do you guys notice from 2018? This is 2022. This is where we are right now. The market is rigged to go up in value. Do y'all know that the S&P 500 is rigged to the point where if a company is not performing well, like most of us think that 1 + 1 is equal to 2, right? So every company that goes in, it's going to establish the economy, and what's here is to stay. And if there's any bad apples, it's going to bring the whole world down, right? That's just the way that they say things on TV, right? If 90 something percent of our portfolios is invested in something like the S&P 500. In that particular situation, you might be correct. But the S&P all the time, they will kick out companies that aren't performing well. They'll throw in new companies like Robinhood was just added to the S&P 500. Now, why do you think they added Robinhood to the S&P 500? Think about that. Robinhood. Why would they be adding Robinhood to the S&P 500? Because it has growth potential. Anytime you guys see the powers that be start adding companies to something like the S&P, that's telling you something. They are going to get the American backing, the backing from all the mutual funds that are out there to ensure that there's investments going into those particular companies. And you guys know that if you're getting funding and you know that money is coming in where people is buying your stock, even if it's at a higher price, it doesn't matter what's going on with your business. The higher your stock price go, you have access to those. Your market cap starts to go up. That means you can go and buy other things that can help you stay on the top. It's little things like that that you guys need to pay close attention to. But the S&P 500 is at all-time highs. And most of you guys are like, I don't know if I want to invest in the stock market. All the way back here in 2018, for some years, you've been listening to the wrong people, and all the investments and all the silly business ventures that you invested in, you decide, and I'm not going to go the real estate route or the stock route. I'm going to go to this get rich quick scheme over here. Now, that get rich quick scheme did not create the most millionaires ever in the history of this world. The stock market has created the most millionaires ever, but yet so many people still think that it's like a casino because it goes down. And do y'all know when the stock market goes down, your real estate goes down? Do y'all know when the stock market goes down, the value of your car goes down? It's just that the stock market is real. It's in your face. You know, a lot of you guys feel like you're healthy. If I go up to you, you're like, yo, I feel very good. I woke up this morning at 8 a.m. But then when the doctor checks your blood pressure and your heart rate, you see that, oh, wait, hold up. You're not as well as you think you are. The stock market is real. That's why people are afraid of it. It has nothing to do with it being a casino and so many people are losing money. It's because it's real, and people don't want to deal with real life. They don't want to. Back in 2022, they didn't want to deal with the fact that their real estate probably dropped 30 or 40%. Remember back in 2008 and 9 when you guys bought your houses? A lot of us bought houses at the high. Let's say you bought your house at $400,000. I promise you, if anybody asked you how much your house was worth, you never said it was worth less than $400,000, even from 2008. Even when that $400,000 house was worth $200,000, you told everybody it's worth $400 because that's how much I paid for it. And then it took 15 years for it to get back to $400, and then it finally got above that. And when you check Zillow and you started to see how much your house was worth again, you're like, oh, my house is worth $500 now, and it's worth $600. But all while it was less than $400,000, you were in denial. See, the stock market doesn't allow you to be in denial. The stock market says this is the value today. Take it or leave it. And people can't deal with that. Oh my God, I put $100,000 in Apple. It's down 20%. It's now worth 80. That's the worst freaking investment I ever made in my life. Sell it all. I can't take it. And then 2 years later, Apple is worth double the price. And then you're like, oh man, how come I didn't see that? How come things go up in value when I'm not in it? All right. So what I'm going to do, guys, is I'm going to start looking at your stocks, and I'm going to tell you a couple of things before we even look at it to show you guys that the What Would Joel Do method works. All right. I'm going to perform what I call a magic show. The magic show is I don't care what stock y'all give me. As long as it's over $1 billion in size, you guys are going to see the same exact pattern every single solitary time. I say this every single time I do one of these because people are like, Joel, it can't be that easy. And I'm like, it is that easy. Joel, how are you able to get? It's not about getting stats, and like the things that we use already have the math included in it. If you're looking at a chart, that's math. If you're looking at a moving average, that's math. If you're looking at anything, most of these indicators that were created was created by a formula, right? And what a lot of us are doing is we're looking at these formulas. Look, we know that the market goes up or down. You know how big that particular company is. So, depending on how big it can grow depends on what type of, what field that it's in or what class that it's in, right? Anything that's AI related or tech related are going to get a higher appraisal than a restaurant company. That's just a fact. Restaurant companies are not going to be worth $1 trillion in market cap, but the Apples, the Amazons, the Googles, the Nvidias, they are, right? And they can continue to grow in price. But if you have never learned what a market cap is and you've taken multiple classes, I want you to fire whoever's teaching you today, because they're not teaching you the fundamental things that make the market go up in value. And that's why I rant all the time, because I'm like, guys, oh my God, I got fifth graders that know more information that you guys do. You guys are all looking at all the wrong stuff instead of how big is this company? Can it grow? Is it bullish or bearish? Right? And what do I use to see if it's bullish or bearish? I don't mind sharing my strategies with you guys. I got friends and family that tell me all the time, Joe, why would you give them all the secrets? You could just sell this and make a gazillion dollars doing it. I'm like, why? When I'm making a gazillion dollars over here anyway. Like, why would I got to make all the freaking money? I don't have to do that. Right? I'm teaching it to you guys because I hate seeing people not make money on something that's so freaking easy. And then you got so many people that are keeping you out of it because they have no knowledge of it. They don't understand it. They don't breathe it. They don't make it a lifestyle like I do. Even when I'm on the golf course, I'm listening to CNBC. I got CNBC on right now and I'm talking to you guys, right? Because I live it, I breathe it, I understand it. It makes sense to me. I come from real estate. I understand value. I understand the value of real estate. I understand the value of stocks. I understand that everything is rigged to go up in value. I understand that the government prints money. That money finds its way into the bigger companies that are out there. If you're not investing in it, you get left behind. Okay. I'm going to keep saying that over and over and over and over again until you guys understand it as well. Look at it. The market went straight up. It didn't go straight up. It went up and then down. And then a lot of people sold here. A lot of people selling right here now. Why? There's nothing here that tells us to sell. I know I put out a post that said, it looks like the market's going to pull the rug from under us. You don't sell until the rug is pulled from under us. Okay. You're going to get a chance to sell if the market does decide to sell off. Selling everything off because you have a hunch is gambling. Let the market tell you what to do. All right. I'm going to get to you guys' stock. That was the first hour. For the next hour, I'm just going to look at you guys' stocks and you guys' stocks only. What I would like for you guys to do is when you place the stock, I want you guys to tell me the time frame that you want. Is this a day trade? Is this an investment? Is this an option? Is this crypto? And then that'll give me an idea of how to analyze that particular company. So let's get started. Let's go to the top. All right. First one. Bam. All right. O'Neill said, can you look at Pfizer for 1 year? All right. Now, guys, Pfizer was red hot during COVID. Why is it going down now? Because ain't nobody afraid of COVID no more. Now, where's the mistake that everybody made? What did Joel teach? Joel teaches using the what would Joel do method. It's so freaking simple. You use the 200-day for bias because everybody on the planet uses the 200-day for bias. Everybody. The 200-day moving average, guys, is the universal most used indicator on the planet to give you bias. If it's angled down, you don't want to be around. If it's angled up, it will increase your luck. I created that corny statement so that you guys can make simple, fast decisions quickly. Now, what direction is Pfizer aiming or going? Down. Guys, when did Pfizer start going down? When did Joel start telling y'all over and over again? I did a million consultations where everybody wanted to buy Pfizer. I was like, not me, because Joel's been in the market for 15 years. And like a magic show, when the 200-day starts to angle down, I promise you guys, you don't want to be around. Y'all know what date this was? This was September of 2022. What year is it now? It's September 2025. 3 years later. For 3 years, I've been telling y'all, don't buy this, 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 don't buy this. What I gotta do? A dance? I got a bankhead bounce for y'all? Don't buy it. Joe, you don't know what you're talking about. I got somebody that works for Pfizer. They got this going on and that going on. Well, I ain't buying it. Who you listening to? Look at what happened. If I don't care if you didn't look at anything, I don't care what indicator you use. I don't the million that y'all use. I don't care what's going on down here, what's going on with. Before you buy or sell anything, you always start with the basic fundamentals. If the 200-day is angled down, you don't want to be around, or you might have a period of time where it's going to continue to go down. So as long as you know that Pfizer continues to go down in value, buy it. But Joel likes to buy things that go up. I'm just like that. I ain't buying nothing that's got a downward 200-day moving average. Y'all know that about me. That's the what would Joel do method. So when the 200-day started to angle down, I ain't want to be around. When's the last time it did it? Here. Use your eyes, guys. Use your eyes. The 200-day started to angle down back in 2019. It went down, and then it started to go up again, like right around 2020 because of COVID. So for a whole year, I could have stayed away from this stock. I could have bought it way up here when the 200-day started to angle up. And then I would have increased my luck and I would have made all-time highs. That ain't the case right now. The 200-day started to go down in 2022. And you guys, and I'm not saying you, O'Neal. All right. Anytime I start going on a rant about a stock, it's not the individual that put it out there. All right. Y'all should have known 3 years ago to stay out of this stock. But y'all are stubborn. You're stubborn. Maybe you took some course that you overpaid for, and they had a certain strategy that was there that said, no, you buy stocks that are at 52-week lows. That's also the dumbest thing I ever heard. You gonna buy a stock that's at 52 weeks. Hold on, let me make sure I understand this. But Joel, don't you want to buy low and sell high? You buy low and sell high, Joel. That's what you do. That's not how the stock market works. The stock market works like this. If it's at its 52-week low, that means nobody on Wall Street wants to buy this. That means all the billionaires that are out there said they don't want to buy Pfizer, but your thousandaire butt think it's going to turn around because you buy it? Does that make any sense? Why did I buy United Health just recently? Because a billionaire decided he was going to buy it. I don't listen to thousandaires no more. They lose you money. Billionaires is what's going to make you money. That's just what it is. This stock started to go down for 3 years. And I mean, it didn't just go down. It went in a straight line down, and you would have known to get out in 2022. Now, what do I like about this stock? It's forming what we call a base. The bigger the space, the wider. What did I say? The bigger the base, the wider the space. It's something like that, but it's basing. That means when it hit this low of $25 back in 2023, it pretty much has been ranging between 23 and 20 for 2 years. I like that. But when the 200-day first started going down, it's no way on this planet you would have got me to buy this stock. Maybe for a trade, but as an investment, for a 1-year investment, hex no. So, what do I think can happen? Well, let's look at the chart. It's forming a base, which increases its space. So it looks like it might want to turn around. So even though I've been ranting about this particular stock, it actually looks like a good buy right now. Now, what is my mindset? My mindset is this: if the 200-day is angled down, I want to be cautious and I don't want to be around. But if it's been basing for 2 or 3 years and it just can't drop lower than 22, that means you got a lot of buyers that are buying it at 22. Maybe it's even the company buying back their own stock. So Joel still ain't buying this stock until it breaks above here and this 200-day start to angle up. I might not get into this company again until it gets to about 30. Now, I get this all the time. Joel, why would you wait until it gets to 30? I mean, it's $6 higher. Okay, I'll miss out on 25% return. But if I was to get in at the $30 level and this bad boy starts to go, if I get in at the $30 level and this bad boy starts to go up back to its all-time highs, y'all see this number right here? Look at this top number. It says 150% return. I'll earn 150% return. So I'm going to be cautious about this one. But I'm still angry at all the people that I told to not buy this, and you continued to buy it over and over and over and over again, and you lost a lot of money. You lost 50% of its value. Now, I hope you've been loading up on it, and maybe there's a catalyst that's out there. That a catalyst, guys, is something that can push the stock up and get people to buy it, you know, and continuing this trek to the upside. But for now, the charts are saying be cautious. If you're going to buy something like this, buy it when you see the next 513 cross right there. Y'all see this? You see this 5 period and this 13 period when it crosses like that, then buy it. So at least if you were to buy it there, and I'll make that a little bigger. If you buy it there at $24 and it gets to $26 and it drops back to 24, at least you would be at break even. Okay. All right, cool. That was a good one. All right, let's look at the next one. Speaking of UNH, Christian said, let's look at UNH long term. Now, I'm assuming long term is 1 year or longer. All right. The definition of an investment, guys, is 1 year or longer. All right. Long-term investments are usually 5 years or longer. Okay. So let's look at UNH. United Health Group, guys, is the company where the CEO was killed, murdered. And they had some discrepancies in their, I don't know if it was payroll, but in their accounting. Anytime I see accounting errors, I get out of the company. Now, I know I speak in absolutes a lot. So I wouldn't say I would never get in a company because I just recently bought UNH. And I bought UNH a couple of times, right? And I went against my strategy. So I bought UNH a while back when it first dropped, like right around here. And then I got caught in it when it dropped again. And then I sold it. The reason why I bought it is because the 200-day was still kind of flat. But then the 200-day moving average started to go down. So my theory is if the 200-day is angled down, you don't want to be around. Okay. And sure enough, when the 200-day started to angle down using the what would Joel do method, you didn't want to be around. So when that 200-day started to angle down here, you would have saved yourself a lot of money and time. Now, why did I just get into it recently? Well, a couple of things happened. We got a 513 cross, which I have a video out there that you can learn so that you can learn what this 513 crossover means. But good old, the Oracle of Omaha, Warren Buffett came out and said that he's buying, or his company is buying, United Health. So If the Oracle of Omaha says he buying and he's the best investor to ever do it, then I ain't gonna listen to these thousandaires over here, including Joel, and I'm gonna buy it with him. And sure enough, we bought in right around the 300 area. And now the company is sitting at about 344. And I put a post out in the room saying, "Hey, look at what I'm in right now." Now, if you were a ultimate member, you would have gotten the alert the day that I bought. Right? That's the beauty of being able to pay that $50 a month. And guys, $50 a month is what, $600 a year? Like, to know what every single thing I buy long term and it's only going to cost you 600 a year, that's an investment, especially if you sitting on six figures. Okay? What's 600 bucks? I can make you that money back just by being in UNH. And that's why a lot of people pay that 50 a month, because they want to know what Joel is buying when he's buying it, because that's what I do. If I sell something, I put it out there and say I'm selling it. When I'm buying something, I have full transparency. This is what I'm buying. This is why I'm buying it. If it goes lower, maybe I'm buying more. Or I'll say something like, I bought a 0.25%, and I'll buy a full amount. A 0.25% is like, everybody knows that I buy at least $10,000 worth of anything. So if I say I bought a 0.25%, I probably bought anywhere from $2,500 to $5,000 worth of it. Sometimes I might go in big, just depending on what I'm buying. But for the most part, if I'm saying a quarter position, is no less than $2,500. All right. And if I'm investing in something, it's no less than 10 grand. Now, do I have 50? I bought $50,000 worth of Bitcoin. So every now and then, I'll make a big purchase. But more than likely, I'm going to be transparent on what I'm buying. All right. So I'm in UNH. I put it out there. There was a 513 cross. The Oracle of Omaha said buy. I said, hey, I'm going to buy with him, even though the 200-day was angled down. So what made me do it? I went against what the indicators were saying. And this is what makes me a little bit different than anybody else. You have some traders that are out of tune with what's going on in the everyday market, right? They don't watch CNBC. They don't watch Bloomberg. They're not on Reddit. They don't really know what's going on in the real world. They're only looking at the technicals, right? Then you got your fundamentalists that only listen to TV, but they don't look at the technicals, right? I'm what you call a funda technician. I'm going to look at the technicals and I'm going to listen out for the fundamentals, and then I make a decision. That's part of the what would Joel do method as well. If you really want to be in tune with what you're trading and investing, guys, you got to know what's going on in the real world, right? Everybody, like if you didn't know today that Nvidia is investing $5 billion into Intel, and that's the reason why Intel is up 30%. You need to change the way that you look at the market, especially if you call yourself a so-called full-time trader, because that was the biggest news of the day, right? Nvidia investing $5 billion in Intel. Oh my God, it's up 30%. Some of you guys will look at the indicators and see Intel up 30%, not knowing why that actually happened. You got to merge the fundamentals with the technicals. All right. Renee says, I'm a long-term investor. Iron, please. Now, you got me on this particular company. I don't even know what Iron does. Iron. All right. So Iron is at all-time highs. Is Joel going to buy anything at all-time highs? Nope. Nope, nope, nope. But if I'm in it, I ain't selling it. Oh, I guess I'm going to sell today because the Feds came out with their information, and sure, I'm just going to go ahead and get out of this long-term investment. Why? Nothing here is telling you to sell. Guys, stocks that usually hit highs continue to hit highs. I don't know if you guys understand this, and it's because a lot of you guys aren't looking at the technicals, or you're using what I call counter trending tools. I've never in the history of me living ever met a wealthy or a rich counter trender. And counter trending is what we want to do, right? You see a stock that's at its all-time highs, you're like, I ain't buying that. I'm going to short it tomorrow. And then you wonder why, the stock keeps pushing up higher and higher. And you're like, why is this stock pushing higher and higher? There's nothing going on with it. Because stocks that tend to go up continue to go up until all the people that were betting on it going down have gotten out of it. And then it starts to go down. If you watch my 513 crossover strategy video, you'll know when to short these bullish freaking companies. Okay. But today ain't the day to do it. Some of you guys are like, it's Thursday. It's triple witching on Friday. I'm just going to put a short on today. That's your strategy. You put a short on Thursday because we sitting at all-time highs. I guarantee if you try that 10 more times, you probably going to lose 8 times. You're going to win those 2, and then you're going to adopt that as your strategy. And then when you lose all of your money, the stock market's a casino. No, it's not. Understand the percentages. Things that tend to go up keep going up. The trend is your friend until it ends. And that means the trend down too. Things that continue to go down in price until they base out, because a stock has to come down, base out, then start to go back up. Usually when a stock hit its all-time high, it'll sit there for about 4, 5, 6, 7, 8 days before turning around. Stop shorting it the very first day it hit its all-time highs. That's the worst strategy on the planet. You can never trade with me if you trade it that way, because you're going to make money. You're going to make money fast, but you're not going to make consistent money. All right. I'm all about consistency. I'm all about being able to trade something without even looking at it that works on any and everything. That's what's made me successful for these years. But, this question is, this particular company is doing extremely well. I would not get out of it. I would stick with it and see what's happening. Let's see. It is way out there too. So we always say this, right? The 200-day moving average, at some point, you're going to see the average again. We don't know if the average is going to be higher, but look at where this stock is. It's so high above where it came from. It's in the stratosphere. I wouldn't be surprised if this drops, 50, 15 or 50%. You guys familiar with Fibonacci retracements? All right. If it comes back down, it might come down to maybe this $21 area, right? Where you might want to either buy more or maybe sell. All right. But for now, I would hold it. I would just continue to hold it, and just watch and see what happens. But for it to go up in price, it will probably do something like this, because if you were using Fibonacci, and a lot of people just don't know how to use it, right? And I get that. Like, people, some people know how to use things, some people don't, right? When we hit this low and we came up to this particular price, where did we come down to, guys? The 50%. Joel, it's like magic. It is if you know how to use it. If you don't know how to use it and you're just putting Fibonacci's out there, it's not going to make any sense for you. So anytime a stock really moves up in price, it usually comes back about 20 or 50%, and it stays at that level before it starts to shoot up again. So a lot of people will say, well, Joel, where do you can use the Fibonacci in 2 places. You can use the Fibonacci, you can use it from this low, or what I like to do is I like to use it from the last lowest point, right? So you have a high probability that this stock will probably come back down to this $21 area. It might shoot a little bit below it. And if it can sit there and base out for about 3 months, then it'll probably form a new high. And that's just what stocks do. Stocks never go up in a straight line. They're going to always stair step. So even in this particular case, look at what this stock did. It ran from 118 to $6. Then it went from $6 down to $2. Then it ran from $2 all the way to 15. Then it dropped from 15 all the way down to 4. Right? So when this stock drops, it drops really really hard. Even probably past, 50 or 60%. So if the pattern, like patterns with stocks is just like patterns with people. Once you start seeing certain patterns with individuals or your animals, like those stocks usually follow those same patterns for, the history of that particular company. So when this thing pulls back, it pulls back hard. So I can pretty much look at its beta and tell that this is a high beta stock, right? It's going to move. It's going to move up and it's going to move down really hard. So that's how I would look at that particular question. Let's look at this look at this question from one of my golfing buddies. All right. Sherlin Luck, we call him Lucky, says, as a mortgage professional, I got two questions from my clients. How much money do I need to get started in investing? And I don't know where to start. All right. So everybody's going to have a different risk tolerance. We all were not born at the same time with the same amount of money in our pockets. We are all not on the same, we are all not the same. $100 to me might feel like $100,000 to somebody else. So I like to work in percentages. That's why when I'm showing receipts, guys, or when I used to show big numbers, but I started to realize that I didn't want to dupe you guys with big numbers because that number is big to you. I get it. $10,000 is a lot of money for some people. It will literally change your whole month. 10,000 is not really going to do that much for me. Okay. And that's just because of the amount of money that I've been putting away for years. So what I tell people to do is this. All right. When you decide to invest in yourself, it's always an amount of money that you actually can invest, right? I don't care if it's $10. The percentage that I use is 10%. So if I get a check if I get a check for $1,000 that week for working, and that's after taxes, and I'm sitting with $1,000 in my checking account, I typically want to take 10% of that and start investing it. Okay. That's where you start. All right. If you can pay more than 10% to yourself, then go ahead and pay more to yourself because I treat it like a tithe. All right. And you pay yourselves. We pay so many other people but ourselves. You guys need to start paying yourself. Again, if you want to pay more than 10% to yourself, then do it. If you're working for a particular company, I always tell people in the beginning, I don't care what your job is, max out your 401k, especially if the company is going to match it. It's going to feel like hell the first 6 months. You're going to feel like you can't live off of the amount of money that you have coming in. But we're humans and we adapt. You're going to be able to adapt to whatever that amount is, whether it's picking up another job or what have you. But by maxing out that account, guys, if you're investing, if you are able to invest that full 401k, that 18,000 to 19,000 a year, I have done the numbers for you guys. In the last 15 years, if you had just maxed out that account and bought the S&P 500 every month and continue doing your job, you had $1 million in 17 years. And that's outside of the real estate that you bought for yourself. And that's outside of the 10% that you've been putting into your Robinhood or M1 finance account. That's how you become wealthy, slow but fast. Because guys, 10 years goes by fast. I don't care what anybody says. I don't care if you're 20 years old right now. You're like, 10 years is half my life. Believe me, 20 to 30 is going to be way faster than probably the last 5 years of your life. So you might as well start now. That's a very, very good question, Mr. Lucky. All right, we got Jerome says they like paying for 10,000 classes on how to set up a chart and learn what the 200-day simple moving average is. That's right, guys. Like, If you guys are out there paying 10K and you're learning fundamentals that I'm teaching you guys here for free, and your kid don't have a trading account yet or a custodial account, and you're wasting money over here, knowing that you've been watching me for years, that you could have taken what, a $50 class and learned the stuff that you guys are learning in this $10,000 class. You need to change what you're doing, because you're getting duped. You're taking the short route. You're not vetting the people that are teaching and educating you. You're not literally talking to people that have taken the class and say, can you give me a rundown of everything that's going on? Like, nobody goes to a college. I'm not going to go to Howard or Harvard or FAM without knowing if they offer what I need there, or what's going on there, or I can go online and read testimonials on, what the school has to offer for me and what they've done historically for me. You guys are just taking stuff off of people showing you a big number, and you're like, oh, I need that big number too. Sign me up. Right. And then I hear the horror stories. You take my consultation for $50 and you're like, dang, why didn't I just come to this dude first? Right. He would have told me exactly what route I needed to do. I could have saved this money and I could have started investing in my future and my kids' future and my family's future. Right. And use that money to get the roof done on my house, or that down payment. Like $10,000, guys, is a nice little down payment on a nice little business or an investment property you buying. And you guys are paying for classes with that joint. It's crazy to me, and don't own no real estate or stocks. It's baffling to me. But it's y'all's money. Y'all got money. Y'all rich. Y'all know what y'all want to do with it. Whatever. All right. I can't tell you how to spend your money, but a lot of you guys, I just wouldn't be doing it. All right. Sadira says, I've had a session before and it was definitely worth the money. Hey, that came at the right time. What up? What up? All right. Hi. Desiree said, Mrs. Gale said, hi, Joel. Top fan. Appreciate you, bro. ASML. As an investment, is it still at a good price to buy now? Okay. Oh, you did say as an investment. All right. So let's look at ASML. It's also in the semiconductor space. All right. So ASML, let's look at the 200-day moving average. All right. The 200-day moving average started to go up, guys. This is what I love. If you've learned the What Would Joel Do method, you guys already know this right here. This right here is what I always teach to look for. Bam, look at that. Look at this. Oh my God, that is beautiful. That's like textbook Joel Harrison investing. You see a 200-day moving average. You see it start to turn around. You see it hit the 200-day moving average. It doesn't go lower, and you get a 513 cross. Bam, bam, bam. Thank you, ma'am. It's up 7% today. As an investment, the most important thing that you look for when you're looking for an investment, guys, is not what the stock price is. $9.29 is going to scare a lot of you guys. So I don't want you to look at it as $929. I want you to look at it as $9.29, and you're just buying more shares of it, maybe 100 shares of it, right? Because $9.29 going to $11 doesn't seem like that's a lot, right? Or $9.29 dropping to $7 might not seem like a lot of money. But 929 to 700, oh my God, that's a $200 drop. Joel, why would I do that? So first of all, you need to know what the market cap is. So let's look at the market cap. Let's pull this out and let's go to stock search. Let's just go to search and let's just type ASML. If you notice, guys, ASML is a $366 billion company. All right. It moves $22 a day. All right, so it's a great day trading tool. Moves $22. It moves up. If you got a decent amount of money in it, right? You got 100 shares. Well, that's a lot of shares. That'll be like $90,000. But every dollar move, you making some decent money. So, it's a $600 billion company. I'm sorry, it's a $300 billion company. And at one point, it was $1,100. So even from where we are right now, if you were to buy it, there's still 18% worth of equity in this company. What I also like about this chart, what I also like is that you have what we call a head and shoulders pattern. A head and shoulders pattern, guys, is when you see it's like think of something like a breakdancer spinning on his head, right? That's the head, this the shoulder, this is a shoulder, right? Usually when you have a head and shoulders, see it's spinning on his head, that's like his hands, and that's like his head, and his body is like this. Usually when you see a head and shoulders pattern like that, this usually goes back to its highs. So even if you bought it today, there's still 20% equity in the company. I love buying companies with 20% or more equity. I love buying real estate and stocks with 20% equity. I actually don't even buy companies unless it has a minimum 20% equity in it. My sweet spot is going to be 50%, but 20% is where I'll start taking a chance at that particular company. So even if I was buying something like an Apple, y'all ain't never going to see me just buy Apple today. Now, if I see Apple hit an all-time high, drop 20%, sitting at that 200-day moving average, I'll buy it sight unseen, just the fact that it's 20% down. And then if it turns around, I might trade it in a different account, even though I own it in one account. So with this having 18%, it's right there kind of where I like to buy. Now, would I buy it here? I would, but I would buy a quarter position. Why? Because look at what happens. Usually this stock will go up for 5 or 6 days, then it'll go down, right? Look at the patterns of the company. The company will always tell you what it wants to do. The company is always going to tell you what it wants to do, right? So when it is going up in value, let's just count. When it goes up in value, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, then it kind of goes down, right? 1, 2, 3, 4, 5, 6, 7 days, then it starts to go down. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, then it starts to go down, right? Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days, then it starts to go down. So now we're at what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This 10 days. So if this 10 days here, 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 chances are it's probably about to come down a little bit. And then I can buy it because it'll look like this, guys. It'll have a couple of red arrows, and then as soon as it starts to break out again, and you get a 513 crossing this green using the what would Joe do method, I would buy some more. Okay, so it looks pretty good. Looks pretty good. All right, let's look at what Tristan said. QBTS. All right, so if you're into quantum stocks, all right, I bought a lot of. Well, my sons bought a lot of this in their portfolio. I told them when they were in town, I educated them on it. They really wasn't sure about it. And I was like, y'all need to just buy this. So it's really my buy in their accounts. But I told them this is something you probably want to sit on for like 10 or 15 years because that's the time frame that they're saying when these companies are going to explode in price. And sure enough, they listened to their daddy and now their stock is up in price. It's up 6% today. All right. So if you're into quantum stocks, so quantum, guys, is you got AI and then you got quantum. And once quantum hit, AI is going to go to a whole nother level. Like computers and machine learning is going to get to the point where it literally will be like the Terminator. So I'm afraid of it, but I'm encouraging it because if you're invested in all these AI companies that can explode in price, you're going to make a lot of money. To give you an idea how big QBTS is, let's look at the market cap. I know a lot of you guys are still like, what the heck is a market cap? Been trading and investing for years, don't know what a market cap is. Baffles me. This company is worth, this company is a $8 billion company. Now y'all see these big numbers? ASML is worth 367 billion, right? Novo Nordisk is worth 274 billion. Well, QBTS is only worth 8. 274. Think of it like this. Novo Nordisk is a $274,000 house. This house is worth 8,000. 8,000, 274,000. Oh, I see the difference now. If this $8,000 house grew to 274,000, I'm gonna make a gazillion amount of money depending on how many shares I have invested in it. Because what, 274 divided by 8 is like 30 times my money. I got $1,000 invested in it, it can be worth 30,000 one day. If I got 10,000 invested in it one day, it might be worth 300 grand. Right now, y'all see why I invest $10,000 blocks. Why I've invested $10,000 and made 60 or 70,000 off of a $5,000 investment, $100,000 worth of Bitcoin. You know, a 30,000 invested in Tesla, $300,000 it's worth one day. And that's just 2 of the many stocks that I have told you guys that I've invested in. All right. And showed you guys the returns with your own, you know, you guys were able to see the receipts. You guys were able to ride the ride with me. But yet, y'all want to go out there and pay $50,000 for a class. All right. I'm going to get off of you guys. But this is quantum. So it's at all-time highs. Would I buy it now? No. Let's go through the same method that I just did, right? What's the what would Joe do method? First, 200-day moving average, angled up. Great. It increases your luck. Second, I need to know the pattern of the every stock is going to have its own pattern. Look at what happens. This stock goes up for about 20 days and it sells off hard. Then it goes up for another 7 or 8 days. Then it sells off hard. Then it goes up for another 2 weeks. Then it sells off hard. Then it goes up for another week and a half. And then it sells off hard. And then it goes up. We already know the answer. You guys are not doing this. You guys are literally going on Reddit and listening to your friends and trying to buy at 52-week lows. And I'm like, who the heck is teaching y'all how to trade and invest? It obviously ain't no real traders or investors. Like the strategies I hear are so ridiculous because it's what novice people like I can always tell novice teachers like who just came into business because you're smart, but you try to use common sense strategies in the real world that you think applies here. And it does in a way, but it's a little bit different because the stock market is based off of momentum, right? When things go down here, you actually don't want to be around it. Yeah, when real estate goes down, you kind of want to buy it, right? But real estate ain't dropping 80 or 90% and then going up 600% and then dropping 60% and then going up, 1,000%. Real estate will drop 20 to 50% and scare the heck out of everybody because the economy really is bad. And then it'll continue to go up and it'll go up slow. That's why so many people trust real estate more than they do stocks because Apple drops 20% every year. Did y'all know that? Apple, Microsoft, Nvidia, Amazon, Google. There's no year that it didn't drop from its all-time highs and drop 10, 15, 20%. So when it happens, you should know that, oh, this is when it happens. Let me buy some more. But what a lot of people will do is when it drops, usually it's some negativity in the news. So then you'll sell it all because you haven't looked at charts. It's not a lifestyle for you, right? It's something somebody told you to do and you've never looked at charts and understood the pattern. So it doesn't make any sense. You're not a funded technician yet like Joel. You got to blend the fundamentals and the technicals. And then this stuff becomes easy. Right? Everything that we're looking at today is going to have the same. It's going to generally have the same patterns, right? What is the 200-day doing? When do I get in? When the 513 crosses happen? If it's gone up for this amount of time, you kind of have an idea when it's going to sell off just by looking at what it did in the past, right? And that's kind of how I want you guys to look at the market. All right, let's look at Hope was laughing at me over something. Andrew said, "What up, Jay? What's going on?" Jamani said, "Okay, I'm on the chat." Childhood friend. Dion, I appreciate that. Telling other people to join. Oh, here's a different one. All right, they want to look at gold futures. All right, so let's switch it up a little bit. We were looking at the stock market. Now let's look at futures. Now, guys, futures sound like it's something that's out of some, tech movie. The futures market. You're going to have to predict what's going to happen in the future. To be honest, the options market should be called the futures market. And the futures market should be called the options market. So futures, guys, is nothing but our market. Take the class, right? It's a way. So if you ever wanted to be a day trader, day traders need to have three things to be complete, right? So many people come in the market, they'll have I was an athlete, so I'm always gonna have my sports references. But like some people can come in and just shoot the 3-pointer, right? And then if you shut them down, you put two people on them, they can't shoot the three no more, so they can't make no money. Or you got some people that can only dunk. And then you got some people that can only shoot, the mid-range jumper, right? But then you have those greats that can do it all. You can hate LeBron, but he was a complete player. You can hate Jordan, but he was a complete player, right? They were all defensive and all, offensive MVPs as well. You can hate Kobe, but he played offense, he played defense, he can shoot the three, he can dunk on you, and he can shoot the mid-range shot. When you want to be a Jordan or a LeBron or a Kobe, you're going to have to learn the futures market, the options market, and you're going to have to learn how to trade stock, right? Can you make a living just doing futures? Yeah. Can you make a living just doing options? Of course you can. But when you know all three, you become that complete trader and investor. So the futures market is actually, in my opinion, the easiest way to make money. When I put out those posts about, hey, if you make your, did you make your $100 a day? So I see that we're looking at. So what I'm going to do is, I know we're looking at gold futures, but I'm going to look at the MGC, right, which is the micro, because a lot of you guys can't afford the big gold. It's very, very expensive. But a lot of you guys can afford gold futures. So if we were looking at gold futures, just to give you an idea of how much you need, $2,100 to trade gold. Okay. So let's say you wanted to trade gold a day, and we were day trading, and you see, hey, all right, I want to trade gold today. I don't know what it's doing. I'm gonna use the what would Joe do method to trade, right? When you go here, it's gonna teach you like how much it moves, right? So it's gonna cost me $2,100, and every dollar move, I'm gonna make $10, right? So if it goes from, if I was day trading it, for every dollar move, I'm gonna make $10, and I was day trading gold, and I wanted to make my $100 for the day. Even if I had $2,200, if I was trading gold futures, let's say I wanted to short gold, and gold was sitting at $3,700. Now you don't need $3,700. You just need 2,100. 2,100 bucks, right? Every dollar move, I'm gonna make $10. So if I was shorting gold and gold dropped from 36.99 to 36.65, well, 36.99 minus 36.65 is like 35. 35 times 10 is $350. So with $2,100, I could have made $350 shorting gold or betting on it going down. And that's just intraday trading. And let's say I wanted to make money on it going up in price using the what would Joe do method. We see a 513 cross. Let's say you got in and it was at 36.72. You had 2,100 bucks. You bought one contract. It went from 36.72 to 36.76. Well, that's a $4 move, right? So I would be up $40, even though I'm using 2,100 bucks. So a lot of people love using that $2,100 to make their $100 a day. They could have made $350 here if they wanted to, and then been out of that, right? And you're actually trading like real gold. So a lot of people love trading the futures market because you can get in and out of the market 100 times. A lot of you guys didn't notice in the regular market, a regular account, if unless you have $25,000, you guys can't buy and sell things over and over again. So if I looked at Apple and I wanted to buy Apple over and over again, get in, get out, I can buy one share for I don't know, let's say I bought Apple today for $235 and then I sold it for $240 and I made $5. I can only do that. I can buy it and sell it. I can only do that 3 times a week unless I have $25,000 in my account. Most of you guys don't have or don't want to commit $25,000 in a trading account. I always tell people it's like a business, right? Every business should have a $25,000 or $100,000 line of credit anyway. So if you ever decide that you want to be a day trader, I always tell people it's going to cost you probably $30,000. You need to be liquid $30,000 so that I can trade stock, so I can buy Apple over and over again 1,000,000 times if I want to. I can go into the futures market. Now, in the futures market, guys, you don't need $25,000. All you needed was 2,100, and I could buy and sell gold over and over as many times as I want to, which is why so many day traders go to the futures market. But I see so many of y'all run to the options market where I'm like, if you're trying to make daily money, you should learn futures first. The options market is okay. It's just that you really, really got to be advanced to kind of, because the moves are so violent, to day trade. Like, I don't even day trade options. Well, that's because I have the liquidity to be able to do stocks and futures. And then when I trade options, I'll day trade options every now and then, only when I see like big news on something and I want to make a quick 100% return or 1,000%, try to get 1,000% return. I'll go into the options market knowing I can probably lose all of my money. But for secure fundamental getting in and out, I'm going to trade the futures market or the stock market. So even if we were looking at gold over a longer period of time, you don't necessarily have to day trade it. You could swing trade gold. And even if you were swing trading gold, remember, for every dollar move, I'm gonna make $10. Look at this 513 cross that happened right here. Do y'all know that gold was at 34.16? Let's do the math. You remember how I told y'all every dollar move is $10? Let's say on August the 25th, you bought a futures contract and you can hold it overnight. It's going to cost you $2,200. Gold ran from $3,400 all the way to $3,700. I'm literally teaching y'all futures right now for free. Let's say gold ran from $3,400 all the way to $3,750. Y'all see the difference? That means it ran from $400 to $750. That's $350 that it ran. But remember how I told you guys for every dollar move, you're going to make $10? That means on that particular move, I would have made, or I would be profiting $3,500. On that move from August to September. So about a month, I would have made $3,500 and I only would have been using $2,100. To give you an idea of what percent return I would have made, because it knows, I would have made a Is that right? Oh, I think you can't do it in futures. It's just going to go by numbers. But whatever the case, I would have, using $2,200, I would have almost doubled my money. That's like buying, and I see a bunch of you guys buying crypto. I'm like, guys, you could be buying futures and it runs just like crypto, even better in some cases. That's why day traders learn how to trade stocks, options, futures, and crypto if they want to be whole. So you'll know which direction and you'll know what you're trying to actually do instead of putting all your eggs in one basket over here. And you don't even necessarily know if that's what you kind of want to do. I see a lot of you guys run to the options market because you think, oh, I don't have $25,000, so I can trade options. And I'm like, you also can trade futures, which is actually even better than trading the options market. And it's so easy to teach it. And then you don't have to spend so much freaking money, but learn all four if you want to be whole. All right. That's a good one. I'll go a little bit over today just because I ain't got no tea time set up yet. Kim said, thank you. I guess I must have shown one of your stocks. Sadira says, oh, and I appreciate you for that. All right. Howard alum said Costco investment for 1 year. Costco, one of my favorite stocks. Costco. All right, let's look at Costco. What do you notice about Costco? 200-day moving average is angled up. That increases your luck. That means if you're in it, stay in it. And if it came down to it, just like Joe, you got to tell me every time it touches the two, I've been buying at 52-week lows. Yeah, because you learning from thousandaires. The way that you buy stocks and make money on it is you buy stocks that are bullish that pull down to their 200-day, not stocks that are going down that's hitting 52-week lows every day. I don't know why you guys are doing that and losing like everything. Anyway, this is how you buy companies. You buy bullish companies with bullish 200-day moving averages that hit the 200-day moving averages that started to go back up in price. Costco, great opportunity to buy it. It dropped in price. We knew where it was going. The 200-day moving average, it was still angled up using a what would Joe do method. You would have been in somewhere around 923. You could have rolled this bad boy up all the way to 1066. It came back to the 200-day moving average. Do you buy it when it hits it? No, you buy it when it starts to go back up. It started to go back up right here. It went up in price. So look, even if you're in it right now, I wouldn't sell, because if you bought it there, you still bought it less than where you were supposed to get in at. The 200-day is still angled up. That means it's going to increase your luck to go up in value. Now, can it go down? Of course. I wouldn't be concerned with this stock going down in price until you break this value right here. If it breaks this value right here, and you probably want to set, y'all know you can set an alert that goes to your, I teach this in my classes. You can get an alert that goes to your phone that tells you. I could be on the golf course. I could be swinging, hit a drive right down the middle, and then I get an alert, and then I get mad like, who's bothering me on the course? Then I look at my phone, and the alert says, Costco is at $823. Then I'm going to say, why did I set an alert for Costco to be at 823? So then I wait until I get in front of a computer. I look at my text thread that has all my alerts. I see Costco sitting at 823, and then I can decide right there if I want to buy more of it or if I want to sell it, thinking that maybe, I'm going to look at the 200-day. If the 200-day is angled down and it touches that, I'm getting out of Costco. If the 200-day is angled up and it touches that value, I probably want to buy it. You options traders, that's when you buy those 3-month, 4-month, 5-month options that are out there. This is how you buy at support, not by flipping through 5 different freaking charts. I done seen y'all. I'm going to look at the 1-hour chart, the 4-hour chart, the day chart, the month chart, the week chart, the year chart. And then if all of them line up in value, then I'm going to buy. That's the dumbest strategy I've ever heard in my life. All right. There's either long-term, medium-term, and short-term. So If you want to see what it's doing short term, that has nothing to do with what it's going to do in the next 2 weeks. Now, I can look at the year chart. I can look at the week chart. Now, if you're going to do that, guys, what is the week chart doing? The week chart is saying this is bullish. Okay. The day chart is saying this is bullish. That's the only information you need to say, all right, I still feel a little bit more comfortable buying this to the upside. Now, Joel also said that he ain't buying nothing unless it's 20% equity in it. So you take out this tool right here, you go to it to the highs, you go to what price we're at right now, and it's going to give you a value. If that value says 20% or more, Joel probably will start buying it. That says 11%. I ain't quite buying it right now. Now, I'm in Costco, so it don't matter. But when it dropped way down here, look at what that number was, guys. You think it was by chance that it was 19%? Or if Joel is a 1%er, and I know he trades better than 99.99% of people that are out there, and he said on a general basis, most people are going to want to find equity at least 20%. How does he know this? Because when I was doing real estate and I was dealing with investors, if that house didn't have at least 20% equity in that particular asset, they weren't looking at the house, and the sweet spot was 50 cents on the dollar. That's how true investors look at things. They want it at 50 cents on the dollar or lower. The same thing applies to the stock market. When you have a great company like Costco and you got a 200-day moving average that's angled up, and you see that this bad boy is down 19 to 20%, ding, 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 ding. I don't care what your friends say about it. I'm buying it. What gives you the strength and the power of saying, I'm going to buy this even though it hasn't started to go back up in value? The 200-day moving average. Why? Because the 200-day moving average is telling you for the last 200 days, on average, this stock is going up in price, not down. Think about that. When the 200-day is angled down, that means that they took the closing price from the last 200 days, added them up, and the price is coming down. That lets you know that that asset is falling. That's why the 200-day moving average, if it's not, it's the most important tool on the planet when it comes to finding the bias of an asset. It don't matter what we look at. We could look at Costco. We could look at crypto. Same thing. Same thing. I can look at crypto. I can tell you when to get out of Bitcoin. When the 200 days angle down, I can tell you when to get right back in when the 200 days angled up. Y'all think it was by chance that it sat here and it kept bouncing off the 200-day? I keep telling y'all that this stuff is easy. Y'all are just listening to the wrong people. Well, okay, you don't think it works there? Look at freaking Forex. I don't care. I don't even trade freaking Forex. I'm just going to pull up the first thing that I see here. What's this? USD CAD. I don't care what you look at. It doesn't matter what you look at. It could be Forex. When the 200-day is angled down, you don't want to be around. When the 200-day is angled up, it increases your luck. It keeps touching the 200-day. But yet y'all out here crying about why investing and trading is so hard. And I'm like, guys, this stuff is mad easy. I can go across any asset class, see the same patterns every single solitary time. And it's not just this year or last year. You guys are looking at the wrong things instead of the easy button. Push the easy button. 200-day, angled up, angled down. If it's angled up, increases my luck. I want to buy at it. If it's angled down, I don't want to be around. I don't care what information you get from people because it's telling you that everybody on the planet is pulling their money from it. It's an average over 200 days, not 2 days, not 3 days, not 4 days, 200. That's why I rent. I rent because this is so freaking easy. It's so freaking easy. It doesn't make any sense why anybody's losing money in it. Okay? You guys just got to, whatever you learn, throw that stuff out. Simplify what you're doing. Think about what the goal is. Clarity. I want mental clarity going on. It should be crystal clear why you buy something. if there's equity in it, if there's a bias in it, how long are you in it? How big is that particular company? These are the questions y'all don't ask. You look at sales pricing or stock pricing, what people are saying on TV and what friends and family are saying. And this person said something negative about it, so I'm not going to buy it. This company is old. This is AI, so I'm going to buy this one. This one is a penny stock, so I'm going to buy that one. Like, if y'all are buying penny stocks, you might as well give away your money. Penny stocks are the worst traders I've ever seen in my life, because it's a get rich quick scheme, which you can get rich quick. Just do it with the right stuff. You should be trading options. Why are y'all trading penny stocks in 2026 when you could be trading options and making the same amount of money, if not more, trading options on Apple and Amazon and Google and legitimate companies? But y'all messing around with this trash over here because you listening to thousandaires. Millionaires and billionaires don't have nothing to do with freaking penny stocks. Penny stocks are for losers. I'm saying that. I don't care if I hurt your feelings. I don't care if I hurt your mama and your daddy feelings. They are for losers. Stop trading them. Educate yourself on some options and some crypto and buy that. All right. But learn how to buy it. All right. That's my what? Second rant for the day. All right. So Costco is a great company. Buy it. I don't know what your strategy is. I don't know how much money you want to put into it. All right. There's only about 11% equity in it. So, if you buy some, buy a quarter position. The 200-day is still telling you that you can stick with it. If it forms a base, go back in the past and see what it did when it formed a base. It formed a base here from 2021. It formed a base here for 2 years, but at least you didn't lose your money. But for 2 years, you really didn't make any money. Why? Why? Because the 200 days angled down. I could have told you 2 years ago what might happen. You want to buy companies where you got a 200-day angled up. When it's sharply up like that, it's telling you that money is flowing into it. And it's going to continue to flow into it because it's easy money. It's easy money. Y'all got to start thinking. Y'all got to start saying to yourself, this is easy. This is easy. Joel makes this easy. I've never in my life seen a cat come out and show as many receipts as he has on a daily basis, on a weekly basis, because it's easy to me. I can go to the golf course and out trade everybody, not even looking at the market, because it's easy. Y'all complicate things. Stop complicate. Complicated strategy gives you complicated results. Easy strategy is crystal clear. I either win or I lose. What did I lose on this year? I lost on AMD and I lost on UNH. And I'm proud to tell everybody that. I can't even tell you how many times I won. It's too many. It's too many to name. And that's not here to brag. It's here to tell you how easy this is. Like, how can you not make money on the market when dang near 400 out of the 500 companies on the S&P is dang near their all-time highs? Like, that makes no sense to me. You mean to tell me 8 out of 10 stocks is near their highs and you can't pick one of them? It makes no sense to me. All right. Okay, so micro strategy for a swing trade. Stephanie wants to look at micro strategy. That's my rant. Y'all done tired me out. Let me drink some coffee real quick. So micro strategy is a crypto, basically one of the best crypto stocks that are out there. I don't care if you don't believe in crypto or not. Fundamentally, what do you see? I see a 200-day angle down. Well, Joel don't want to be around. What? But Bitcoin is up, Joel, and Ethereum. Well, then buy Bitcoin and Ethereum. If Bitcoin and Ethereum's charts are up, then that's what you should be buying. But they buy Bitcoin. They're basically all Bitcoin. Yeah, but it's how they're buying it, right? This company's been going sideways, right? It went up, went down, went up, went down, but it's pretty much at the same price that it was back in November 2024. What do you think is happening? I know exactly what's happening. When MicroStrategy started to go up and you had a 200-day that was angled up and this bad boy went from $140 to $600, why wouldn't you take your profits when it goes from 140 to 600? Bitcoin didn't go from 140 to 600. I thought it was all Bitcoin. Right. They're over leveraged. If they're 80% worth of Bitcoin, and then you go and you look at Bitcoin's chart and you're like, hold up, Bitcoin didn't grow 6 times its value in a year, then ding, 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 ding. What is that telling you? It's overpriced. It's probably coming down in price. Now, it doesn't necessarily mean it's going to go to zero. It's just taking a break. And what people are doing is they're taking money out of this, probably putting it into stuff like Ethereum or Solana, stocks that have not increased in price, or assets that they were investing in. And I'm only naming the top ones. It's not that Solana was just this popular stock. No, anytime you guys are investing in any asset classes, I want you guys to look at like the top 5 or 10 in market cap in that industry, because that's who's going to get the money first. But this is starting to fall in price. It's holding its value, but I'm not necessarily buying this. Not when I see something like this. Now, I would have stuck with it. So don't get me wrong. When this got near the 200-day moving average, anybody that bought it here, and here, you're a genius, because you're learning the what would Joe do method. 200 days angled up, 513 cross happened, you're in it. Right? It went up, it kind of came down, then it went up. But I mean, even on these moves, look at how violent they are. I mean, 277 to 420, that's like a $277,000 house going to 400,000 in 3 months. Like, at some point, guys, people are going to take their profit. If you bought a house for 250 and then 3 months later it's worth 500, you might think twice about living in it. You're like, well, dang, I just doubled my money. I actually can sell this house, go buy the same house I was just in, and now I don't have no mortgage. That's how these cats is thinking. You double your money in literally 30 days, it's going to come down in price. And it's going to keep doing that, right? People are buying it here, selling it there, buying it here, selling it here. Now we're at the 200-day moving average. Now, what I do like is look at what you got, a 513 cross, beautiful. This is what I teach. So anyone that was able to get in, you got a little bit of equity, right? You got about 10% of equity if you're in it. If it turns back around, then you sell. But it looks like MicroStrategy, it looks like it might want to try to take off again, but Joel is not going to take this trade, because the minute the 200-day starts to angle down, Joel doesn't want to be around, because Joel don't have to trade MicroStrategy. There's 1,000 other stocks I can make money off of. I will miss out on this one, and I'll be fine. It's not the end all be all. This is it. You're never going to see this ever again. That's how y'all treat a lot of assets. Joel, I just have to buy it. Like, why? I'm never going to get this chance ever in my life, and I have to make. Y'all been listening to Eminem too long. Like, you good. You ain't got to freaking buy it. You don't have to. There's other stocks. There's other assets. I'm going to wait until I see the easy setup. And guys, it's not like this 200-day can't start turning around 7 or 14 days from now. You just got to check on it. All right. So that's MicroStrategy. Good job. Somebody said the 1-minute chart. All right, we'll look at some stocks on the 1-minute chart. The 1-minute chart is what day traders use. So let's say we wanted to trade MicroStrategy today, right? If I wanted to trade MicroStrategy today, I usually trade off the 5-minute chart. So using the what would Joe do strategy, I could have been in this trade and made $1 gazillion today. I could have bought, let's say I had $30,000, right? And I had that as my business, right? And I bought $33,000 worth of this stock. And it went from 33,000 to 35,000. I could have made 2,000 today just off my 33 grand. And a lot of people will do that with 25 or 30 grand. They can make $1,000 a day if they're trading an asset like this that moves. And the only way you're going to know if it moves like that is you got to check its ATR, which is its average true range, which again is another thing. I don't know how you guys are day trading and y'all ain't never heard of the ATR. Like, what are you using to day trade? Like, if you're day trading and you don't know how much this thing moves, how do you know how much you're going to make? You going off of a dollar amount. I'm just going to trade this until I make $300. Well, you can't trade with me because you only have half the information. Learn what the ATR is. If you don't, book a consultation with me. Take one of my classes. It's simple. Once you learn it, it's going to change the way that you trade because at least you know how much it moves, right? MicroStrategy on average moves. MicroStrategy moves. Let me do some magic again for you guys. You guys are going to be like, oh my God, I can't believe he did that. Nobody has ever showed me this in life. MicroStrategy moves $15. About to show y'all something. Y'all gonna be, nah, I didn't even know MicroStrategy. I didn't know what the ATR was. I ain't know none of this. MicroStrategy moves $15. You decide to buy MicroStrategy today for $336. Now you know MicroStrategy moved $15. How do you know it? Because it says it right here, $15. So when MicroStrategy goes from 335 plus 15 and it goes to 350, half y'all, not even half y'all, 99% of y'all on this call right now will be sitting at 350 like, I'm just going to wait till tomorrow and it go higher. I'm sitting back like, if the ATR is 15 and it moved 15, you already know when to get out. Some of y'all don't know when to get out. So you've been in it since freaking what time? You've been in it since you made all your money from 9:30 to 10. You got the maximum move, and then you still in it all day long. I'm just going. Now it did go higher. I ain't gonna lie. It did go higher by $5, but that was luck. It moves on average $15. Get out when it goes $15. All right. Just that information I just gave you guys right now is worth millions. Because it's gonna a light bulb's gonna go off for a bunch of you day traders. Like, what? Ain't nobody in history ever broke that down like that easy. Because they're not real day traders that profit like me. I ain't even know these numbers yet. I just know how to day trade and what to look for. I can do it with my eyes closed. All right. But y'all can't. Y'all are coming to me with these ridiculous strategies. And I'm like, y'all are not even looking at the fundamental basis of what the stock is going to do. Like, it's not that hard. And most day traders nowadays are creating robots to trade the market. So it's even easier because all they're doing is plugging in certain information so the robot knows when to buy it and when to sell it. The robot don't know. The robot just knows, oh, it moves this much on average. So when it moves its average, sell. All right. Hopefully a lot of you guys got that. All right. That's the 1 minute chart. All right. Sherlin said, let's look at electronic arts. Now, electronic arts, guys, is becoming an AI stock again. It was popular back in the day. You know, EA Sports is who makes, Madden and all of the sports games that you guys like that are out there. But they're starting to get into AI. They're using AI to back the technology behind their particular company. So anything that's AI related is going to run. Well, Electronic Arts is sitting at all-time highs. What's Joel's theory about that? I'm not buying anything at its all-time highs. Now, will I buy it as an investment? Yeah, but I better have some equity in it. If it don't have 20% equity in it, I ain't buying it. I need it to come down some to the 200-day moving average. It gets to its 200-day moving average, just like all of these people that bought. Joel, how come every chart you showed me today, every single time it hit the 200-day and it was angled up, people were buying it? How come I'm just learning about this today? And I've been in classes for like 5 years. Because the people that are trading or teaching you ain't trading or investing. They're making money off of you. That's why. It's that easy. It's always been this easy. It's been this easy ever since the technicals came out. The 513, the 200-day moving average. That's why I teach the fundamentals. That's why I teach you guys price action. Because if you don't understand price action, all of this stuff is going to be difficult. Learn the fundamentals first. The fundamentals of why you're buying it, what's happening in it. Break down the stock. Is it buy? Is it bullish or bearish? What is its 200-day doing? Even if you're on a shorter time frame, use something as a bias. I don't have 50,000 indicators on here confusing y'all. Now, this 5 and 13 can confuse some of you guys. I get it. And this at the bottom. So don't look at the bottom. We just looking up here, right? It's telling you everything. This is bullish. It was bullish for about 15 days. Now it's coming down in price. Now it's getting bullish again. Well, how long should it go up? Well, if it went up for 15 days there, and it went up for 15 days there, and it went up for 15 days there, and it went up for 15 days there, then how many days you think it's going to go up? 15. So then why are you in a trade that's going 30 and 40 days out? Dang, man, I ain't never look at it like that. I know you haven't. Simple is always the best option when it comes to investing and trading. If you can't break it down that easy, then you shouldn't be buying or trading it. I still want you guys to invest. This is the trading side. This is to kind of get a little bit out of what you're doing. But even as an investment, guys, stop buying things that a 200 week and a 200-day moving average is angled down. That's going to save you guys a lot of pain. It just is. Okay. And start buying companies that everybody else is buying that maybe takes a break and drops 20, 30, or 40% before it starts to ratchet back up and make you a gazillion dollars. Okay. All right. Let's look at Google. I'm going to try to get to all of you guys' stocks real quick. Uh-oh. Oh, man. Oh, let's look at Google. All right, let's look at Google real quick, and I'm gonna have to get on out of here. Google, y'all done tired me out. 200 days angled up. Will I buy it way up here? No. No, Joel. Please tell me that people aren't buying it again at the 200-day and I missed it. Yeah. All you options traders paying a gazillion dollars on buying it at the best time and oh my God, like 200 day, 200 day, 200 day. 200 day. Do I need a class to tell me to buy this when it touches the 200-day moving average and then it goes up in value? It's Google. It's Google. AI Google. It's common sense. Okay. Now, would I buy it way up here? No. Why are you guys buying options at $300 right now? Because you don't know how to trade. Google has never been $300. So why are you buying a strike at 300? Wait for it to come down and then buy a strike that it's already been to. Okay. Okay. But Google looks good. This is a very good question. Tisha says, is that SMA or EMA for the 200? You can use either or. You can use the simple moving average or the exponential moving average as long as you're consistent with what you use. I don't care either or. I'm using simple moving if you want to know, but one is not better than the other. And there's a lot of people that will say one is better than the other. And I'm like, no, they're not. They're not better. As long as you're using one of them and you're making it consistent, so you're not looking at SMA on one chart and EMA on another chart, you're going to be just fine. All right, let's look at Microsoft. Anthony said, let's look at Microsoft real quick. 200 day. Look, guys, when the 200 day is angled down, you don't want to be around. Look at this. This bad boy came up, kissed the 200 day, and then reversed. Anybody that says the 200 day is useless or not the best indicator that's out there, run. Run. Because they're just trying to dupe you into something else, or I don't know. I don't know. Look at this. Every time it touched the 200 day, look at this. Ooh, ooh, ooh. And guys, this 200 day is not just drawn like after everything and then somebody comes here and then draws a line right there. No, This 200-day looks just like this. It looks just like this. And it literally comes down to it and everybody buys it. And then it goes up in value. Now, it didn't happen here. And I'm going to tell you why it didn't. It was kind of, well, it just went through it. And then once you break the low, the thing about the 200-day moving average is if it does break the 200-day and then it starts to go a little bit lower, if it goes lower than the last low, you want to be careful, like right here. So like right here, and I'll make that bigger for you. These were lows. So when we got lower than that, you're going to see it fall because it broke what we call support. And then that was kind of scary because then the 200-day started to angle down. Now we got above it, but then Google didn't give you a chance to buy it when it came back to the 200-day. But it looks like you're about to get an opportunity. Even though this looks a bullish here, I believe we get back to 447 somehow. Okay. And if we get to 447 and you haven't bought Google yet, the 200-day is, guess what, guys? 20% away. Look at that. Almost like perfect. That's where you want to buy it, where Joel buys it, where the best buy it, where the 1%ers buy it. Okay. Not up here. Not buying options here. I know the 513 cross just happened here. I get it. So if you want to take a shot at it going up, cool. I'm not going to buy a shot at it going up if I see the all-time high sitting right there. I'm just not going to. I'm going to wait until it has a little bit of equity. So Lyft, guys, was up huge. Now, why was Lyft up in the last couple of days? Because Lyft just did a deal with Waymo so that Waymo can put, I guess, now you're going to be able to go on to Lyft and you're going to be able to pick your Waymo through Lyft. But Waymo also did a deal with Uber. So Waymo is here to stay, but Lyft was up pretty big. Now, guys, my kids have been buying a lot of Lyft in their accounts. Why? Look at this. This is one of the best stock charts I've seen today. Lyft hit a low of $7.85. Guys, pay attention because everybody here should buy this. Lyft hit a low of $7.85, and it went sideways from 2023 all the way until now. Lyft used to be a $88 stock, and it's now $22. If Lyft was to go from 22 to 80 something dollars, you're going to be up 267%. My kids have been loading up on this company. And my kids are pretty smart. So if the youngins is buying this, the 200-day moving average is looking good. Look at this. It's starting to turn back around. It's been basing for 2 years. This is the type of chart I like to look for as an investment. So buy it. Paul said, thanks, Joe. Steve said, curious about AMD after NVIDIA invest in Intel. Are we at a buy, hold, or sell? All right. So I'm going to have to do a little bit of research on that one because AMD, I lost money on. Everybody knows this. It really made me angry, right? It dropped from $227 to $80 when every other stock on the planet started to go up and the 200-day moving average started to go down in 2024. It just started to go back up this year. But by the time the 200-day moving average started to angle up, we were already way up here. So the 200-day moving average is angled up. So I might even take a shot at AMD, okay? But I'm going to need it to come down to this 126 level. I'm about to put an alert right now. I'm doing my homework as we speak. And if it gets down here and we see a break back to the upside, we get a 513 cross, you will probably see me buy it. Now, why do I like it? Because there's a lot of equity in AMD right now. It was a $227 stock. If it gets down to this 200 day, hold on. If we get down to this 200 day, it's going to drop 40. It's gonna be 43% lower than its all-time highs. That's always in my sweet spot. Anything between 20 and 50. Ooh. 43. I like that. I like 43. Since 43 is close, I might as well just buy it when it gets cut in half. So if 227 was the high, 113, 115 is what I'm looking at. So I'm gonna put another alert at 115. Now, why do I like that? Because investors, we think a little bit different. We think in numbers. A lot of you guys look at this number, which I don't care if that was 155, 15,000, or $1.55. I don't care. What I care about is where it can go to, right? So if I know that I can make 100% return if it goes back to its original price, that's what every investor looks for. Every investor in every industry loves 100% return. Why? Because we can take out the money that we initially invested. If I invest $10,000, it's now worth 20. I can sell 10 and everything else is the house's money. That's why 100% is forever, ever across all industries going to be the basis of when you should sell. Okay. Joel, when should I sell? At least 100% return or higher. So if it's at 115, 113, it gets back to all-time highs, 227, I can sell half of it, let the rest ride forever. Okay. I love doing that because I won. I can't lose. I doubled my money. Right. So that's what I'm looking for in AMD. I have to do my research to see how the Intel news will affect it. But the charts are going to tell me in the next week or two, we're going to actually see how it's affecting AMD. For now, it's down. So if it's down, then I might as well wait until it hits, 126. And then when it hits 126, I'll reevaluate AMD and see what's going on. We'll see what the 200-day moving average is doing. All right. What's Oscar? What's this? Oscar Mayer? Oscar Health. 200-day is starting to angle up. I would have stayed away from this company from 2024 till now. If you decide you want to get in it now, the 200-day is starting to angle up, but I'm still not going to buy it here. This looks like it wants to kind of pull back to this $15 area. All right. Just because it's red, right? And let's go back and look at it. Like, you don't have to believe me. Anytime this goes red, look at how many days it goes down. 1, 2, 3, 4, 5, 6, 7. Look at this. When it goes red, 1, 2, 3, 4, 5, 6, 7. When it goes red, 1, 2, 3, 4. Well, this is day 3. 1, 2, 3. I'm thinking 1, 2, 3, 4, 5, 6, 7. You see what I'm saying? I'll wait till it gets around maybe the $15 area before I decide to buy it to the upside, even though it's up 4% today. All right, IONQ. This is also another play on quantum computing. All right, this is one of my favorite, actually. My sons are buying QBTS. I'm buying IONQ because it's a more expensive one. Now, it's sitting at all-time highs, so I haven't been bragging and showing you guys my profits yet, but it's the highest that it can be. I'm in the profit. I bought it way back here when it started to break out using the what would Joel do method. And a lot of people in the room have done it also. And I also came out in my app and I was telling everybody when I was buying it. Y'all know the formula. 200 days angled up, it increases your luck. Am I buying it here? No. I'm going to wait for it to come down in price. What about the ES? So she's asking about the S&P 500, but she's asking it in futures form. So you can buy the S&P 500 in futures, or you can buy it in stock. The S&P 500 is at all-time highs, guys. That means it's the highest it has ever been in history. That means companies right now as a whole is doing the best that they've ever done in history, and you guys are still losing money in the market. That makes no freaking sense. If the S&P is at its all-time highs, your account should be at all-time highs. All right? Get with the program. Get with what the millionaires and billionaires are doing. Am I buying it here? No. Am I waiting for it to come back to the 200-day? Yeah, because we typically come back. Same thing. I know, guys. It's the same pattern y'all keep seeing over and over again. 200-day, people are buying. And look, it's not giving you, it's not like it hits it for one day. It'll sit at the 200-day for like a week before it starts to go up in value. What do I think is going to happen? I think we'll sell off. We way up here. Look how far away we are from the 200-day moving average. And this is just to frustrate all the bears, because all of you cats that are out there that is just reversing the market because you think it's too high, or because I put out a post that September and October are the worst months in history. So I'm just going to reverse off of that. I don't mind you using that information. Yes, September and October are the worst months for the stock market, but you don't start selling until you see the market sell. There is no 513 cross to the downside. Anybody that sold here, I get why you did it. I get it. 513 started to cross. It was, but that was August. That's not even September or October. So anybody that did this, you can't trade with me. It's September and October. Then you got somewhat, no, that's still August. And then this happened. It still really isn't a 513 cross. You got one day we sold off, then it was green. Then one day, then it was green. You're going to need to see a 513 cross that crosses and we sell off for like 2 or 3 days. That's not happening. And guys, when the market sells off, it sells off for a lot of days. Like, why are you don't have to be in it the first day. Look at how many days this gave you to get in. I got to be in right here. Why? You could have got in on the 6th or 7th day. Look at this. When it sells off, it sells off. 1 day, 2 days, 3, 5 days could have gone by. You saw the 200-day there, so you know where we were going. Look at this. When it sells off, it sells. I don't have to be the first person the short. That's why you guys are losing money. You're reversing just off of a gut feeling. And that's why the market keeps going higher, because it's penalizing and it's taking advantage of all these people that are bearish on the market. You guys got to also understand that if it's October already and everybody around you, let's think about it. If all the pension funds, mutual funds are all profiting 28, 30% for the year, and it's already September, October, you got 2 months to get your company back in the green. So you're scrambling, you're gambling on trying to get whatever you need to get to. A lot of cats is just like, F it. If I'm going to lose, I'm just going to lose. So I'm just going to buy the market until it keeps going up, because we got a short squeeze happening right now. And then once I get into the profit, then I'll, once I get out of the black or get into the black, then I'm good. Right. And the market is just squeezing all of these bears into all-time highs. And I've seen this happen so many times because of these individuals out there, these bear market bears that are out there that are just shorting just because of the time frame we're in. Let the market tell you when to do things. That's what's made me successful. The fact that I don't know everything. What I do know is patterns. When I see the pattern forming, then I will make adjustments to how I approach it. It's ego that tries to get in front of all of these millionaires and billionaires. It's ego to get in front of something, and then Warren Buffett the next day says, because see, Warren Buffett moves the market, right? You don't move the market. Warren Buffett moves the market. So Stop trying to counter trend things because you think you're smarter than them. You're not smarter than people like me. I've been profiting at night at a very high rate for a very long time. And if I'm still on the bullish side, you don't have to like me. But I'm showing you how all the patterns are the same no matter what we're looking at. It's just that you guys are taking individual stocks thinking that it doesn't matter and that it's going to do something different than what everything else is doing when everything is interconnected. Everything's interconnected. Some things are going to go higher or lower depending on the news that comes out. But for the most part, 90% correlation. Okay. Once you start getting into looking at the ES, going with the fundamentals, you guys are going to see it as well. Crystal said, how much do you need for the ES? So if you were trading the ES, you're going to need $24,000 to trade the ES futures contracts, which is why most people trade the mini ESs, which is $2,400. All right, most of us have $2,400, and you can make $100 a day trading the futures market just with that $2,400. All right, we're almost at the end. All right, we got NVTS. I'm going over a little bit just to satisfy everyone that's here. I did get a little bit wordy earlier. NVTS Semiconductor Company. Is this company a penny stock? It better not be. Y'all know my thing about penny stocks. I can't show them. Y'all trying to get me banned. Okay, it's a $1 billion company. All right, so we got NVTS. 200 days starting to angle up. I would have stayed away from it. I could have pulled up this chart and been like, nope, and then gone on to the next stock. Y'all want to sit there and have study groups and study the company and see what type of catalysts that are coming out, and the whole time you're losing. And I was like, nope, out. Soon as it starts to go up, then I'm like, oh, now I would short something like this and not think about it. Right? I could have shorted it here, 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 and won literally when the 200 day started to angle down. Short 1 win, 2 wins, 3 wins, 4 wins, 5 wins, 6 wins, 7 wins, 8 wins in a row. Look, 9 wins, 10 wins, 11 wins in a row. And then when the 200 day started to angle up, I could start going in that direction. That would have been 1 win, 2 win. I mean, literally in the last, from 2024 to February 2024 till now, I could have won on every single solitary trade here using the What Would Joe Do method. But yet, this stuff is hard to y'all. You guys are losing money. Learn what to look for, and you won't have that problem. Once the 200 day is angled up, you should only be taking trades to the upside. That's going to increase your chances of winning. All right. My name was given, says, thank you. Dang, y'all still putting out stocks. I'm trying to leave and hit the golf course. Visa. All right, Visa. 200 days angled up. That increases your luck. Does it have enough equity for me to buy? No. Visa is solid. It's touching the 200 day. Guys, for you guys that's been wanting to buy Visa, it's at the 200 day. Buy it. It's got how much equity in it? It's got 9% equity in it. Now, stocks like this that may have a low beta, 9 or 10% is going to be that sweet number. All right. It's a solid company. It doesn't move like Apple. You guys got to look at the beta. But 200 days angled up, it increases your luck. So we out of UNH? No, we in UNH. Warren Buffett just bought it. We in it. We in it to win it. You use the ATR based on what rate for the day? I use the ATR based off of the 14-day Wilder. All right, ATR stands for for all-time rents. That's hilarious. All right, Joby. All right, guys, if you don't know what Joby is another company my kids are buying. If you're into flying cars, here you go. Now, look, guys, don't be buying Joby way up here at $20 a share. All right. My kids got into Joby kind of early. 513 cross started to happen. 200-day is still angle up. Now, what I don't like about this is you see that head, you see that shoulder, head, shoulder, shoulder, head, shoulder. That's a head and shoulders pattern. That's kind of bearish. So we might drop down to this 200-day. If you want to take this as a trade because that 513 cross happened, then you're good. Why are my kids buying this stock? Well, for one, it's like the Jetsons. They're into flying cars. All right. But it's also very, very small. This company is a $12 billion company. They said that this company could possibly be worth 50 to 100 billion if it takes off. And if it takes off, you're going to be able to rent a Joby and fly across the city in them. All right. It's going to be part of the driverless. I forgot. I don't know why my mind went blank, but it's going to be into, vehicles. What's it called when there's no robot? I mean, with robots controlling like all of the transportation. This is going to be part of it. All right. ACHR. Archer Aviation. Now you got me on this one. It must be involved in the same thing. So ACHR also is at its 200 days. So if you want to buy it, this is your chance to kind of get it if you want it as an investment. It looks like the company. Hold up. Okay, its all-time highs were around 18. It looks kind of bullish. We're at $9, so we're still 50% off from its all-time highs. So do your research on this particular company. This is what happens when you guys come in late. I can't spend as much time on your stocks. When you say, did you make your $100 a day? Are you referring to day trading options? No, I'm referring to whatever the heck you trade. And it can be stocks, options, futures, or cryptocurrency. I know a lot of people that make their $100 a day trading crypto. But most traders, when they come into the market and they're making their $100 a day, they're using the futures market, not the options market, like everybody thinks. On a live chart, the 513 happens often. How do you know this is the correct cross to enter instead of a false alert? Well, you have to have something that shows bias. So if I'm looking at a day chart, it's the 200-day moving average to show me the bias. All right. If you're using a shorter time frame, I always tell people to maybe use the 20-day moving average. If it's angled up, you want to only take trades to the upside. When it's angled down, then you want to trade to the downside. If it's the only times that you get out of it is when it breaks. Like let's say you get in and it breaks the earliest low. When it breaks that low, that's usually when I would get out of that particular trade. Good question. Tenny says, I have shares in a leap of Lyft. All right, we went through Lyft. Lyft is pretty good. So you're going to do very well, in my opinion, in that particular company. Cleon says, thoughts on Oklo and SMR. All right, they talk about Oklo a lot on TV. So, I mean, this is why Oklo is sitting at all-time highs. So if you're into like nuclear power or anything, I believe Oklo is involved. I think we had this same thing before. There was an Oklo and something else. Hopefully you're talking about the same one, but this company is sitting at all-time highs, which is crazy. I'm not going to buy it way up here, but I do really like the company, and they talk about this company all the time on CNBC. Kramer really does love this particular stock. And you're talking about, and you also want to know about SMR. You got me on this one. Normally I would know about a stock. You see how that's new scale power. So I don't know about SMR, but it's also in that power energy sector. Now, what I don't like is this head and shoulders. So it may come down to this 200-day, but the 200-day is angled up. You see how a lot of people bought it right here. So when the 200-day is angled up, it increases your luck. Are you using Heikin candles? Yes, I am using Heikin candles because as a teacher and educating, I want my charts to look as clean as possible. You don't necessarily have to use Helkinaishi, guys. This is how the Helkinaishi candles look. If I wanted to change the candles to look like regular candles, it will look like this. So it's not that much difference. So it does clean it up a little bit when I'm using the Helkinaishi. Oh, here we go. When I'm using the Helkinaishi, see how it cleans it up and it shows you the trend. Do I teach gamma and delta? I do teach delta. I use delta all the time when I'm day trading because I need to know how much a dollar move is. So when you're trading options, guys, and you're day trading it, you got to know how much a dollar move is. So if I'm buying Apple and I buy it and I see that for every dollar move, that means if Apple goes from 201 to 202, whatever option I buy, if it goes from 201 to 202 and the delta is 0.5, that means for every dollar move, I'm going to make 50 bucks. I need to know that so that I can know about how much I can make depending on what the ATR is. I do not use gamma. I don't, all that other stuff, I don't really care about. It doesn't make money. In my opinion, it's information overload. Some people love having all that information. I don't know why, because if something is going up, I already know it's going up. Depending on the way that I particularly trade, when I trade the options market, there's a simple way that I go about using the market. When I'm trading options, I'm always going with the highest beta and the best risk trade at all times. So um I don't need the other Greeks. So I just use delta primarily. Shamika said BBAI. What's going on, Shamika? We need to hit you up later for my wife's 50th. We need to plan a trip. All right, BBAI, perfect. Big Bear. Another friend of mine loves this particular company, another golfer that I golf with. Uh, Perfect. Y'all see how this hit the 200 day? I know y'all are like, Joel, I can't understand how every single stock. I told y'all this is going to be a magic show. I told you it was going to be a magic show. You were going to be enlightened. If you're here today, you learned something that you probably never seen before or never saw that side of it. And I told you before we even looked at these stocks that you're going to see the same exact pattern across everything that we look at because I'm teaching you guys price action, which arguably is the best way to understand the trends of the market. And understanding the trends of the market is how you make money. If I don't understand a trend is going up or down or why it's happening, I can't make money off of that. And the trend is your friend until it ends. Hit the 200 day, just like we teach, 513 cross, you make money. Easy money. It came down to the 200. Shamika, this is an excellent entry if you were in this one. It's textbook. Down to the 200 day, bounces off of it, 513 cross, starting to go up in price, 5 days up. I mean, you can't beat that. Please do not go out there and run and buy this stock today, right? Because that's not what I teach. I don't teach getting in on the 5th day. All right. But if you are in on this particular option, you won, or trade or investment, you won. Okay. And if you're in it long term, put a stop down here under 452 and see if you can get some push to the upside. All right. DE long term. Why the dollar sign? Oh, that's why. Nope. DE30? I've never seen this before. Hold up. Did you mean to look at DE? All right. Well, same pattern. It don't matter what we look at. I don't care if we pull up forex, futures, crypto. I don't give a dang. If it has a chart, it's gonna have the same patterns, and everything runs off of the same thing. Something as a bias, 200 day. Look at it just bouncing off of it, like we always said, just like a magic show. Joel, I'm tired of seeing how many times these trades work out no matter what we look at. I didn't took anyway. We hit the 200 day down here and look at where we are now at all-time highs. Now, am I going to buy it up here? No. I don't know if this is actually what you wanted to look at, but it looks good. Am I buying it up there? No. But we'll look at just regular DE, which is deer, just in case deer is what you were talking about. If you were talking about deer, we're at the 200-day moving average, which is where you're supposed to buy. Am I comfortable buying it here? Yes. Does it necessarily mean it's about to turn around? No, it might come down to here. But what is Joel going to do? He's going to say, all right, what's the average price that it comes down, right? Does it have any equity? 200-day moving average, that's about 9%. For a stock like this, 9 to 10%, that's probably a good buy. Some companies are only going to give you about 10 to 20% in equity. Walmart's like that. Anytime Walmart drops about 10%, buy it, because it doesn't drop 30 or 40. And when that happens, it's really a steal. So, can it start to turn around here? Yeah, but I got one eye open when I'm looking at this particular company, if that's the deer that you're looking at. All right, XRP. Now, XRP, guys, is Ripple. They have started showing, let's see if we can find an index. So let's look at XRP is Ripple, which is you can buy in crypto. If I was to pull up the 200-day moving, and there is a futures for this one. So this is a tricky one because Bitcoin has BTC. I can look at the futures market. It runs with the regular Bitcoin. I'm not sure about this one yet. I have to look at the Ripple chart and see if the correlation is the same. But it's saying right here, it looks like it's a buying opportunity for Ripple right now. Even if I was looking at it on a week basis, looks good. Day looks good. Even if I was looking at it intraday, it was a good buy. Something's making Ripple pop in price. So if I was a betting man, let's go to super old school with trend lines, which I didn't even pull out today. You got a trend line there. You got it holding right here. It's holding this trend line. If we break this trend line, you might want to watch it. But you do have a 513 cross. It's been going up for about 6 to 7 days. So if you're trading it, if you understand my 10-day rule, the 10 days of trading, then you might want to start lightening up that position. So I think I got to everybody's stocks. All right, so I'm going to go ahead and get on out of here. Hold on. But before I get out of here, again, if you are interested in real estate, you can hit me up at joelharrisonrealtor@gmail.com. Call me up. And if you need a consultation, you can always book a consultation at calendly.com/whatwould-joel-do. I appreciate everything that you guys. Let me take this off. Hold on. I appreciate everything. I appreciate all the positivity that you guys have been throwing my way, and all the cats that's been rocking with me for over a decade. Book a consultation with me. Calendly.com/whatwould-joel-do. You can ask me any and everything that's regarding the stock market. Again, you can go to my PayHip if you want to buy certain classes. I know a lot of people thought that today I was going to announce when the new classes are going to be. I actually have not set those particular dates yet. I am going to ask you guys a couple of questions in the room soon to kind of get a feel for what type of classes you want me to actually teach. I'm not sure if I'm going to do like one a week, or if I'm going to do like I did before, where it would be like a webinar week, where I would teach something every day. Webinar weeks was very popular during COVID when I didn't have another life. Now that I've been doing a million things, it's hard to do 3 days in a row. So, give me some ideas. And but those classes will be dropping sometime next month in the near future. So I'm coming to you guys from Decatur, where it's greater. Please watch this replay, share this video, and I am out of here. Peace.